Good morning, my friends. Good morning, and welcome to the Breakfast Club. My name is Darren Hancock, and I'm your host. Here we are on a Friday, March 1st. We're starting a whole new month now. The year is just ticking by. And I am a ThetaWave Trader. Here we are in the Nasdaq. Let me just double check, make sure my buddy Kirk's at the bus stop waiting for me. I gotta say, I'm pretty shocked about the level of awareness that just suddenly hit the internet. Like, I'm used to having like 130, maybe 20 views on my videos every day, and we hit 900. You believe that? 900 people viewed the show yesterday. That was shocking. So I was quite surprised. Anyway, let's see if my buddy Kirk's here this morning. Richelieu, hello from Russia. Good for you. You beat Kirk in this morning. 6 people watching already. Wow. I guess I got to get used to this. This is kind of, it's crazy fun. I remember the days where 7 people watching would be an all-time peak, an all-time high for the day. Well, I'm honored that you're here, everybody. Thank you for spending your time with us today. And I hope we had to give you guys some decent reads on the market today. So those of you who have actually looked at some of the or the trading video I made the other day. Actually, I'll talk about that in a bit. Let me just kind of blast this. I usually do this 7 o'clock till 7:30ish. I usually see my Spartan Barry. Good morning. Rafiq, good morning. The YouTube algo was on your side yesterday. It certainly was. Holy smokes. That was amazing. Ahmed, welcome. Welcome, welcome. All right, let's start over here. I'll show you what there's a ton of you in here that are new, so I'll kind of share with you my bias for Nasdaq. Long term, here and here. That's the upper limits for Nasdaq for me. Again, it's you really can't predict any highs. It's based on price legs and that sort of thing. So again, that's for around 20,000. ES. Let's look at the daily chart on ES. We have this fair value gap here. We've dipped into it, returned to an old high, rejected off of it. Order blocks now formed. We've come back, balanced to the order block, and now we're pulling back into the midpoint of today's high and low. So if we just stay up here probing the higher high, today might be a pullback into the range for 1, 2, 3, 4. So it might be just pulling back into the range today, back into this order block. So look for ES on the daily midpoint. We don't want to close below this. If we close below the midpoint of 50.81, then we're looking for lower prices. If we run back up into this candle's wick, we've already ran through 50% of that wick multiple times. So I'm kind of flat right here right now, because you can run higher and you could run lower it back into this order block. So just watch to see how this runs today on this candle. Where we close on this candle is important. If we close below or come back into the rejection block and close on that, then I would say that we're looking for a run back deeper into this BISI here on the daily. So when you're managing this one today, look for the range here to the high here. So you're looking for 50.80 to 51.25. That's kind of like the daily range you're looking at. And if you look where we're sitting right now, you're not too far from the midpoint, like the equilibrium between that high and this midpoint here. Dow Jones has already returned back to the order block, and we've got a nice little snappy response off of it. The order block's formed here. We come back in right through the mean threshold. We come all the way back into the mean threshold again here, pull off back to the body. That's a good sign that we're going to continue down. Those three reactions off that just tell me that we've got more downside. So this mean threshold, see how we're between that candle's mean threshold there and this candle's mean threshold here, and it's all done with these last two wicks. So, and you're on the bottom half. I guess if you look from there to there, pull your fib tool from this point here to this point here, you're right in near the equilibrium, the range. So again, no solid opinion other than that this inversion right here. If you're bullish, you want to see that go long and you want to get through this order block. If you're bearish, you want to see it get below here today in the 4 hour and then continue closing down. So draw your fib tool or your box out here. There's an imbalance sitting right in here, so you want to see it close below that on a 4 hour, come back into it, get some support, and continue on the downside. Look for a rejection block and a continuation on a close on this BISI, along with these old body highs here, which we've already tapped into a few times. So I think you're just going to come back and revisit this low. So if we take off back up and we start blowing through this candle again, then we're looking to run out that mean threshold, I think. Right now you're in the equilibrium, so I can't really give you a solid answer on where that's going to go, but I got more of a downward bias for that today. Dixie, we're looking for that return back into the BISI here as an inversion. We've now got a run above an old high, creating a fair value gap. We've returned, we've actually traded below it, come back inside it, running for the lows. You would have got short there. You would have been underwater a bit, but you would go short there for here on a daily basis. So you run for that low, come back down. We're running into this order block here now. We got the high and the open and back into the consolidation. So that's a right here was a cam 1 for a long, didn't get you anywhere, all the way back into a not quite a cam 2, still a deep cam 1, pull back up, and you're looking to run out any recent high. So we're looking to run this high out here today. So if you're into this trade here, you want to take that high right there, return back into this inversion. So that would be the objective to aim for Dixie. So if we're expecting more upside prices on Dixie today, or just to run this high, then we're expecting more downside prices. We're in a small consolidation going on here. We are in the premium range, so if this continues on, I want to see it take out Tuesday's high there. Thursday, no, that would be Wednesday's high. If it doesn't take out Wednesday's high, it's going to pull back into the range, look back into this order block right here. So if we get lower prices, look for, we'll see how it opens up. at 10 o'clock and see what it takes for 10. If it takes the 10 o'clock high, look for a run back into this order block here. Up Prime, good morning. I will get back to NQ shortly. So look for up and then downward prices. I think we're looking for. I'm still looking to get into this line here. Just tap into that inversion. That will bring us down into the box we've marked a few days ago. So we've come in, we've tapped it right now. That's really good considering we had this box drawn in earlier this week. So it's definitely running into our area that we've been calling for. This inversion right here, look for that. I don't want to see it fill. If it does pop down, which means the dollar, if it does go back up, then we're looking for a retracement back into here. So again, if we're looking for that little pop up here, that should drive this down into that box, into our order block in this inversion. I don't want to lose this. If you lose this and come back to the other side, then we have more down and suspecting more upside prices on Dixie. So we're in that 4-hour inversion we've been calling for a while now. Inside that, I want to see this kind of hold price right now. If we do dip down, it's just enough to take these lows out and then a run back up above. And we're looking for these equal highs here to continue on the upside. We need to lose the order block mean threshold right here. And we also need to get on top of this daily fair value gap inversion here. So we could see a nice little run all the way back down into, well, we're at that high already. The bodies, perhaps the bodies right here as a dip down. Keep that in mind. CAD. We're up into the rejection block, lots of equal highs. We're looking for them to take out these highs this week, and we're certainly getting there. This may be the run today for higher prices. We may just come up and make some equal highs again, roll over, and come back into a smaller range before running up there and taking that out next week. Right now, we've come back and keyed off this high here, the body, and we're pushing for higher prices. That tells me that the Dixie's probably got higher push, and the CAD, again, a weakening. We may get a pullback into this if the dollar finally, if it does reach for its high. We're looking for this high that it reaches for, taking out these highs here. So we'll see how that goes today. New Zealand dollar is actually traded below that inversion. So now look for further downside. We may see a deeper dig into this. We've already got this inversion done here. So if the American dollar continues to push down, we're looking for a run below these lows. Perhaps sweep these lows before returning back into the range again. We are in this large consolidation on the daily. This would be like a CAM 2 model with your stop losses sitting down here. So if we do run down maybe into the rejection block, you wouldn't want to see the lows get taken if you're in a CAM 2 model for a long, for these old highs back here. We're right off the mean threshold. We called this one a few days ago as well, where we stretched the consolidation out, return to 50%. That's a CAM 2 model. And you're expecting that to also this little inversion we've got here, run back up, find some support at this, and you want to see it pushing through. So we want to get on top of this, see how we've bounced back up and just hit the bottom of that order block here inside this inversion. So right there, we've hit off of it and we're banging around inside it. So I'm flat with Australian dollar. I'd like to see it get on top of that or get below this to make up its mind whether it's going higher or lower. And obviously trending overall, we're going lower. We haven't had any really significant break in market structure unless you consider this little consolidation, this dip down. This is a That's a cam, no, that's actually a cam 3 model. Cam 1 would be back to here. Cam 2 would be the midpoint of that. Cam 3 would be this leg that takes out the low. That's a cam 3, sorry, not a cam 2. And if you're wondering where these cams come from, they're not ICT words. They're just some words or titles or tags I've given them because ICT doesn't have a name for them. So they're still his model, returning to here, 50%, that price leg. That's still ICT stuff. I just put a name to it, called it Cam 1, Cam 2, Cam 3, and you'll see that on the video. It's a half-hour video I created last Sunday. So look that up so you'll understand a little bit more about cam models and how well they work. And they are all over the place. If you just use those models alone, if that was just your entry models, that's all you did was trade consolidations, you can make yourself quite loaded on demo money. You'd have so much demo money you wouldn't know what to do with it all. Japanese yen. Again, we're back into that consolidate or that little SIBI inversion. We've run through it, come back to it, found all the support at it, ran through it, found support, blew through it, come back up. See, we're right back into this order block right here. So right now I'm flat on this. We're still consolidating. It'd be great. This would be one of those consolidations you'll say, I'd like to see this to have a consolidation here, run up, make a price leg in here, shoot back down, come back into cam 1, 2, and 3 model, and then go short. But that high in close proximity to a takeout with to me it feels like it just wants to go higher. This is just building before it runs a high. If it doesn't take that high, if the US dollar does blow down, I want to see this clean these guys out first, because all these people who are loading in because they're engineering liquidity here to go short. I believe that just looking at that chart, they will not leave that untouched. Before they crash down here, they won't leave it untouched. They'll run that through. Like a sword, they will run that through and then drive it back down. Again, keeping in mind the narrative we just looked at on Dixie, push high and then turn around and come back down. All right, oil. Oil's finally reaching into our objective we've been calling for a week or so. This is the weekly candles. That's a weekly fair value gap. We've run out the highs. That was the objective this week, and get into this inversion, and we've got it like gangbusters. So those of you who got into the oil trade this week, congratulations. You've done very well, and we've hit the objective. Move to the sidelines, have a coffee, sit back, relax, put your little unky dunks up. That's what we call them in England. Rest your unky dunks, pull up a pew, have a sit back, and yeah, so what now you want to see is this high. Now that we've taken out the highs, if we come back, I want to see this continue pushing through for Friday. Just kind of give me the final nod that you want to go higher into the 50% of the range. 50% is the ideal area you want to look for to see some big support off of. But right now, I want to see this run up through here and close above this weekly high that we have, 80 bucks here. It's a big figure level. We're sitting right on it right now. That literally is big figure. So we could see a retracement off of there back into this order block. We don't want to see this order block's mean threshold give way. We want to see that hold price. If it does give way, I do like this stuff that's still sitting down here. There's some huge liquidity down here. Lots of lows, lots of candy land there. So we could still go bearish even up to 50%, pop above that, run all the way back down, and have a really bad couple of months on oil, just when everybody thinks it's sort of running for a highs. It's a problem when if you overshoot your objectives and you overshoot your PD arrays and you say it's going here, you don't know it's going there. You don't know that at all. There's so many things that can happen in here for this to turn around and come back down. Yes, and it could go there and you could say, see, I told you so. But you can't possibly predict every PD array is going to support that price run. Unless you're on a higher time frame and you're sitting on a 15-minute chart. I look at that and I go, way too many. We could see this run come back in here. If we lose that, we're going down. Right now, if you're bullish and you're looking at that as support to go up, I'd say, yeah, go bullish, man. Do your thing. But I want to see that get on top of this first before you remain bullish. And that be a key level of step up, climbing the mountain, right? Getting your foothold. A couple more minutes and then we'll get back to Nasdaq here. So right now we've got gold. We call that gold off of here. It came down beautifully, hit it right off that order block, filled that fair value gap nicely, and we've snapped off of that and had a nice monstrous little run back up. This whole consolidated area here, if you look at it, that is consolidation. We ran above it, come back, cam 1, find support, and off you go. New consolidation right here. So from that high to this low right here, you box that out and you draw it across, pop above, doop, cam 1, off you go. And they almost look simple, don't they? But they're not. You got to develop an eye. Some of you may go, nah, that's not the consolidation from that high. It's this consolidation right here. I'd say, okay, that's fine. If that's your consolidation and you got a huge leg with a consolidation above price action and you have a fair value gap, your entries at the fair value gap and the consequent encroachment of that fair value gap, you want this to remain open. That's a breakaway gap, and off to the races you go. You want the mean threshold to hold price or return to an old high. You might look at that consolidation and say, no, that's my consolidation right there. That's fine. It doesn't come back. You don't get your cam 1, but the next model is the model for old return to an old high. And this model, I love this model when you have a consolidation and the price leg down. That would be like a cam 3 into the leg that takes out the consolidation. And then a big bold candle that raises above, that creates a fair value gap above price action. I know you heard me mention that yesterday. When you have a price with a trade that runs above consolidation, above a consolidation, when you trade back into it, you want that mean threshold to hold, and it loses its luster the more you come down. If it digs down deeper into the fill, it loses its luster for a pop-up higher. Here's a good example right here. See how you have a body, and there's a small consolidation. This BISI, we have a fair value gap that occurs just barely above that high there. We come back, we tap it, then we roll into the midpoint or the mean threshold or consequent encroachment, return to an old high, we gap down. That's a big indicator for further downside prices. When you have a sudden gap down, start to really lose your idea that order block is not going to get re-reached. So if it comes back and fills it like it does right here, you blow through it, there's the body close, you're wrong. You're on the wrong side of it. If you can get the opportunity to get back into your trade again, to offload your trade, remember if we entered in here, if you waited patiently enough to get off of your trade right there, you get off, wait for a reset. Even though you might think this is running back through. No, we're now in that inversion and we've closed below it, so running back into it now gets you on the right side. You're aiming for lower prices. And we'll explain this, and that's on a daily candle. You'll see that, an hourly candle. You'll see that in a 1 minute chart, daily charts, you'll see them all. So that's gold. You're looking for higher prices on gold. So we're anticipating that if the American dollar continues down, gold will get its strength. So we'll have a little pop up. This may come back into here. And then if the American dollar continues down, which is what we're anticipating after the little 10 o'clock pop-up, then further upside prices for gold. Silver, we're still looking for silver to make its little appearance up high. Looking from a premium to discount array, looking for that run back up into premium above 50%. So this consolidation here, you want to see a run up, come back down, cam 1, and then reach for higher PD array up here. Copper, still looking for copper to reach the objective here. We're in a discount, so we're banging around inside here. I'd like to see that dip down into the 50% of this range at least, which into that fair value gap. Leave that little piece open, which is another cam 1 for another run above these highs here. Copper is pretty tight, and we already hit the objective for palladium. And banks, you guys don't do Canadian banks, so we won't worry about that. So let's get back to the opening. Here we go. We have a fair value gap here, all the way up to midnight open. Look for a run back up into the Asia session, a fulfill in here, 18,127. We come back up and fill that little fair value gap right there. You got this little imbalance here, up a little higher. Star Jack, hopefully all is well with you today. Yeah, so far so good, Jack. Thank you very much for asking. Hope everything's well in your part of the world. Sammy, good morning. Kitty, good morning, good morning. Can you believe that, Kitty? Suddenly you got like 300, I got 100 subscribers just in like one day. The algo started pushing our show out there, which was awesome. 900 people watched our show yesterday. Never had that. So again, look for here, see how we've reacted off the order block here. We've got a swing point here. This becomes the breaker. We're just reacting off that right there. I want to see this in the body, no more than the threshold. If we lose the threshold, we're going for higher prices. So let's see what happens. If the 10 o'clock run takes this high out and we get a reaction off of that, we could be looking for lower prices today. Oops, let me get that out of there. We could be looking for lower prices today, running back into this range. So we'll see what the 10 o'clock. All right, this is a nice perfect fill of this fair value gap right here. Imbalance sitting right there. We have a little tiny imbalance sitting up there at 1843. Watch 1843. And 1847 ish, somewhere around there. Buenos dias. Buenos dias, Mr. Victor. And it's very early morning for me today. Buenas tardes. That's the afternoon, isn't it? Buenas noches. Is that the evening? I think I remember that. I have very little Spanish, but I really loved learning it when I went down there for vacation. ¿Dónde está la playa? Where's the beach? And the wife? ¿Dónde está la tienda? Where are the shops? I want to go shopping. Mr. Patel. Mitul Patel. Good morning. I remember the old days when you had 80 subscribers. Ah, yes, the old days. 3 days ago. No, I think I came into the year with 120 people, starting back in August. There's 143. We got a reaction at 143. We'll see if this holds. We're digging into that breaker here. I still think we want to go higher. Matul, you were one of the early ones, were you? One of the quiet ones in the corner that didn't say anything? Because you'd always have like maybe 10 people. I remember when I started out with 4 people. My massage therapist, physiotherapist, and a couple of friends. I started off doing the show, 4 people. Then Kevin and popped in, Lauriston popped in. Kevin's gone now, he's somewhere else, I think. I wish him all the best of success. And Derek was in, and Derek and Laurie just became my steadfast people. They were there every day. We had tons of fun. And I'm just going to have just as much fun with you guys. We're going to find some really unique personalities in here, some great people, hopefully some people that are willing to learn. There are people, you definitely attract some trolls here and there. And if you do, we got a way to manage those. I'm not here to have a drama. I'm not here for anybody else to get picked on or chastised in any way, so they'll be gone. We're just here for good stuff. We're here to help people. So that 18143 where I was calling on the Beezer, that little fella right there, what we're looking for. So I'm just getting a nice reaction off of that now. So yeah, we're going to find some very unique people in here. There's going to be some interesting characters. We'll have lots of laughs, and we'll just kind of, hopefully, my objective is just to kind of have everybody in a very peaceful place that you can feel comfortable to make some trades, make some mistakes. It's okay to make mistakes. Yes, you're going to lose. I'm never always going to be right. If I'm right more than 51% of the time, I think I'm doing good. I like to call every single candle, and I like to try and, once I get on the horse, I try to stay on the horse as long as I can. I don't like to be shook off, and when I get shaken off, I want to make sure I know why and where and how I went wrong, so I can learn from it. There's no such thing as failure for me. It's only feedback. You're not failing. You're just looking for better ways to do your trade. I believe you should always have a trading plan and an exit. You must have an exit. Don't just blindly go into a trade hoping it goes somewhere. That's called gambling. Have your plan, and if it fails, get out. you should have just as a robust exit as you do your entrance, as far as I'm concerned. And we just usually wait around from now, and you start to kind of say, where, if I was an algorithm, would I start to reach for a recent high? I can take it out at 10 o'clock and dig back into my range. It's a Friday. You shouldn't be over trading on a Friday anyway. Don't get too excited about it. We got plenty of time. This year's just, and March is just coming up now. So, and next week you gotta develop some patience. So next week we have non-farm payroll. So we'll be out of the markets and watching from Thursday on. And then as NFP comes in, we'll try and stay on the horse. We'll try and read the charts and stay on the horse. Now, those are great days for it to shake you off. So for me, non-farm payroll is a great opportunity to practice your skills on reading the charts and staying on the horse. And see when you get shook off. What happened here? How did it shake me off? Why did it shake me off? It's a rodeo, folks. It's a rodeo. And you're riding the bull and you're riding a bear. There ain't no horse. You're either on the bull or you're on the bear. You either get the horns or you get the teeth. You got to stay just outside of the range of the horns and the teeth. You don't want to get thrown off. Well, that's my theory anyway. So here's your cam 1. Hit that. We still have this consolidation down here. You want to see stay open. Fair value gap that forms above consolidation. Come back. Still find support at this breaker right here. Last up close candle before run below some lows. Draw that guy out. From there to there. You say, that's the breaker I want to see hold. And see how it comes right into the mean threshold of it. Boom, boom. You want to see that hold price. If it blows through it, then we're looking for more deeper run into here and that inversion. Let's see this inversion right here. Already traded through it. Body already traded through it. Back through the other side. So this is where consolidations through inversions can beat you up. And now we're trading through it again. I want to see that snap through that on the like 6 seconds. I want to see that come back up inside this range right here. You don't want to see it settle below that. Now you're looking for further downside. My friend Derek, how you doing? Johnson Creek, good morning, my friend. Thank you for coming by. Just ban the trolls, no need for drama. I'm with you, Kitty. I'm with you. Good morning, Jay. Cool, could you help me get the market low? Market lower. Yes, let's drag it down, my friend. Let's drag it down. So now we've popped back up above it. We're still on top of these, that breaker's still holding. Reaching for higher prices. Look for this line up here now as your price. Next price run. How long have you traded? Are you talking about me, Jay? I've only traded, well, I've done what everybody else has done. I've lost hundreds of thousands of dollars trading the stock market when I was younger and had no idea what I was doing. I was that classic, hey, my friend told me that this would be a great trade for me to take. So you can't go wrong. Your friend tells you that everybody's buying this, you got to get this. So you go, okay, so you buy it and it crashes. Because if you're hearing about it from your friend, it's already too late, my friends. It's already too late. So I lost lots of money doing that. I even got in with a billionaire who owned a company, and he had tons, millions of dollars in this thing. I thought, he can't go wrong. The guy's made his millions and his billions in oil, and I lost about almost half my fortune because I sunk tons in there. So I've been trading for a long time, but trading better and having a better understanding of the market, that didn't start till 2016 when I joined Michael's mentorship. That's one of the original 800. You didn't see it all in the bio up top there. And I knew nothing about trading. After I learned some of his stuff, I will look at my stocks the same way as I look at this chart. I'll invest if I see an inversion there and we get on the other side of it. If I can't short it, if I'm in a margin account with a short capability, you could short that. You could short a stock that you really like being in, or you want to hold for a long period of time, wait for an opportunity. You see it starting to run back into a range. You look at 50%, what's sitting there. Oh, there's a breaker off of that. Now you can start investing in stocks and doing options and whatever your fancy is, whatever you prefer to trade. It becomes so much more clearer using all Michael's principles that he teaches. So I haven't even been doing any serious trading since 2016. I got long on the NQ 2 hours ago. Didn't notice I did it on a demo till now. Laugh my ass out. Good for you. Paul, good morning from Texas. Good morning, Texas. Thanks for the insight and discussion. My pleasure, Paul. Thank you for your appreciation. I like that. Thank you. Watch this BISI here. You want to see this BISI hold price right now? Continue to the upside. Again, this is not a hard and fast place where we're going to go. We have some equal highs here, so I like that opportunity to run these highs out. And we still got another 16 minutes before the top of the hour. And we tend to like to take out a recent high. See how this is all kind of forming here? A recent high at 10 o'clock and then pull back into the range. So to me, there's just some candy land sitting up here, right? There's some deliciousness. Where's our carrot? Do we need a carrot? That's our go-to staple, isn't it? The carrot. Welcome to the carrot. We've decided that the algorithm is a vegetarian, vegan. We thought it was a carnivore, the way it's been eating us up all this time, but no. It's a vegan. So we've got so much engineered liquidity sitting right here. It just tells me that there's a high probability we're running for all that stuff there. If we run to that high, what have we got over here that supports price? We have some inversions here. This inversion would be nice to see if it holds price. I'm going to draw this one out here. And I encourage you guys to make templates. See how that inversion provided a level of support right off of that. I love it. Love it, love it, love it. So if we do reach for that, that's the price leg finishing. If not, look for just a run up here. Price legs don't always work out the way we want them to. And that was automatically gone now because I have to I took it off of here. We've run all the way back into order block. Just short of that order block. Through the breaker already. Whip through that. Bodies are still respecting it. Wicks do the damage. Come back for full fill. We want to make sure we're above this and above this. So we've whipped through. This is the whipsawing action. This is where you get really beat up in the market. So now we have this SIBI here. If you're bullish, you want to get on top of this. If you're bearish, you want to stay below this and continue pushing through this breaker for running the downside. So take your fib, take your tool, and don't forget, create tons of templates. Now I have templates that are specific color related, and you build a template over here, decide what kind of range, what you've got. So it's a 1 minute fair value gap. Has now been filled. We're inside it right now. Now it becomes an inversion. Now we've come back and filled it. Now do we get below it, stop on it, come back down? Do we go back up, come on top of it, and go up? When you're inside a range and you're making these kind of questions and saying, well, is it going higher or going lower? Give me a bias, Darren. I can't. We're in the middle of that range, and you're like smack in the middle of the range in an equilibrium PD array, and you want to make a decision on that? Don't be keen to rush in and lose your money. Wait for a way better setup. Just because there's a breaker here, let us wait and see. I haven't seen Kirk this morning. Derek, you haven't seen Kirk around, have you? Kirk's usually waiting at the bus stop for me as soon as we start up the show. He's usually right there. It was Richelieu that was the first in this morning. Our friend from Russia. All right, so now we've got, see how we've closed below it? Now we're running above it, and you're right in the equilibrium portion of that range. You can't decide whether it's up or down. This rule, then you start to say, oh, that rule doesn't, that's wrong. That rule sucks. Well, you're in the equilibrium. Where do you expect it to do? It's going to go above, going to go below. When we're consolidating, this is where you get a flog into the noggin, right? You don't know which way it's going to go because you're consolidating, you're banging around. It's the algorithm's trying to pick which array it's going to run to. See this candle here? Body, zip, right out on the line. So that array, then you're looking for what is the downside array. This one's not even in the equation right now, if only for the fact for that inversion. So you're still looking at this guy down here. Oh, sorry, no, we got this guy right here. We've already broke above him here. So mean threshold. You want to see that hold. You don't want to see it blow all the way through this again. If it does, we're back to which side of this inversion are we going to stay on that's in the middle of the equilibrium. Look, I draw my fib tool from high to low here. Look where we're sitting, 50%. So when you're in there, how do you, nobody's going to be able to predict exactly where it's going to go. You've got hopes, you've got dreams, but that's all you got. Reaching for PD, making a decision about a PD array up here or down here right now is a, in a 1 minute chart, in right where we are right now, can't be done. On a 15-minute chart, you may say, hey, bomber, I'm looking for a short here. I like that breaker holding my price. I want to see us react and can come all the way down. Great. If that's your bias, then build your model around that bias. What do I need? I need this to get on this side of this inversion to hold my bias. I need that on the 15-minute chart. I need it on a 5-minute, whatever chart you're trading on. If that's your higher time frame premise bias, it must be maintained here. You can't have it suddenly ripping away from you going, oh, that's still my bias. Well, you can catch it really early by being wrong. If that finds support and you go, that's not what I'm looking for. Now, if you're trading on an hourly chart, you go, this, I don't care about this, Darren. I don't care what is happening there. When this is happening on this chart, I'll worry about it, because that's the chart I'm trading on. That's the time frame I prefer. But you can't say, oh, okay, I'm short on there, and then go, oh no, I'm wrong. Then get out and go, it goes short. You go, oh no, I'm wrong. I knew I was right. You either pick your bias, trade that, or look for here to confirm your bias in whatever direction you want to go. And you'll see here, long before that fails, you'll see why it's failing on the 1 minute chart. And if it's a strong bias, you should get a continuation. Like we talked about yesterday, you can manage it all the way down till it reverses on you. That's the kind of trade you don't want to be in, or you want to be in. You don't want to be in any sloppy stuff. See how we just keep banging around back in here. We keep pulling back into that midpoint equilibrium of that little range we've created right now. He's probably out spending the money he's been raking in with both fists. Yeah, coffee break. Raise up a coffee of your best blend. Here, here. Closed long. 002725. 5 minutes until the news release. So we want to see a big news release and watch what happens on the news release. This is something a lot of people don't watch. Watch when it happens in 4 minutes. Watch the first initial drive and then the reversal. And this, it's not 100%, but it's usually, imagine it like the elephant sticking their toe in the water, like Michael talks about. This is the first little, I'm going this way, but I'm going to sucker everybody in thinking I'm going to go that way. It's that first little, hey, this is my direction. For all you people who are watching me, that's my direction. Then all of a sudden it shoots up, takes everybody going, it's going long, and they all pile on it. It runs to liquidity above the market, then eventually hits a PD array we're looking for, and then runs back. So again, I'm looking for that mean threshold to hold, or at worst, the rejection block. If it starts to drive through the rejection block, then we're running for a new high. So you'll look for, again, more support. When it's whipping through, you don't touch it. You just wait and see what happens. But let's just keep your eye on that first initial reaction on the price, on the news. I've given Derek the power. Derek has the power of moderation. So Derek will be keeping an eye on if my eyes are on the chart over here and people are being rude or trolling or something like that, then he has the power to say, sideline you for a timeout, which I thought was kind of funny when I read it, but timeout or just block you altogether. Abs, I haven't seen Abs in here today, or Lori. So now when I look at these ranges, I like to look for ranges, and then I like to look for PD arrays that are supporting runs to, watching the algorithm run to specific arrays. So watch this next. See how it's kind of making this little, hey, guess where I want to go. But we'll wait. You might see this pop down and you go, oh, it's going down. Those highs are holding in place. Then it's just rips up, grabs them, and drives down. Look for this and see this guy in here buried in the middle of all this mess. You draw him out, or her, whatever you prefer. And I go, what's a PD array that's in a higher time frame and a PD array that's in a lower time frame? See, there's no like array in the lower time frame other than the bigger range from here to here is sitting right here. So that's a premium array and a discount array. Look, there you go. Boom, boom. See how it did not even pop down? It just took off straight. So we're looking for a new high. That's nice. It loves carrots. Woohoo. So I've got nothing here. That little idea of wait for the news, it just ripped up there at 10 o'clock, cleaned out all the highs. Now, where there's a whole setup. I'm thinking of a whole setup we're waiting for now. So those of you who got long down in here, congrats, you just took out your highs. Are you waiting for longer highs? I just ran through a ton of liquidity there, so just so I can be, oh, I just took out a whole new, it's made a whole new high, that's why. So this tells me we have, this could be the potential for the rest of the day. It's just keep running back up with that idea of tapping off of there. So we got this in little tiny imbalance back here. It can come back, tap that. There's a little one right in here for a long. There's a little inversion right, or a little busy down here. Don't ever think, oh, that's too small. That's not important. Believe me, I've dropped my freaking buy order in like right there in the middle of that thing, and it's come down, tap, took me in, and gone for a nice little long. Not that you're going to take any of these ideas I'm giving you. I'm just kind of want you to look at the range we're in now and say, well, if that's the high, that's the low. We've got all bull candles in here. The only one I've got nothing above me I can reach for. So you're in a historical moment here, folks. You're seeing something that has never been seen before in the history of the Nasdaq. You've got a crazy brand new high. Where were you the day that the Nasdaq made the new high? It's like landing on the moon. Don't you feel special? Special right now? Do you remember that day on March 1st when we saw that high? It was so beautiful. Run back, there's the fair value gap imbalance. Keep your eyes on these little tiny, that little area there. If I stretch this out, you'll see it. See it right there. Now, when you get these huge whipsaws like this back and forth, welcome to the news event. Volatility in the market. You've swept the highs now. Either you're going to keep driving higher, or we're going to start to build a reversal pattern in here. So you're looking for one of those island reversal patterns if you're back in the old school trader days. There's a little imbalance right here. See this inversion? You want to see it hold price again. Order block. It's now been validated right there with a wick. I prefer bodies. I prefer bodies to validate the previous candle, not just wicks. Wicks are not as strong as a body is, and a bigger body, the happier I am. Like if that closes like that on a body way up here, then I go, good. That's something you can get some support on and start driving higher. But you see that wick come back, you're like, ah, this is just whipsawing action. You do not want to be participating in this. And if you do and you win something, good for you. Was that your theory? Was that your trade plan? Finding support, trading below, just wicking into it, back into the range. Little tiny imbalance down there, see, filled. Discount arrays, all being munched on right now. We're back into this candle's body. So now ask yourself, if we're in a premium and discount, where are we right now? Are we back into that freaking equilibrium again, you ask yourself? 50% is here. 62% retracement of that large range we just got started here. Whip right back up, tap that inversion. Now we're through. We gotta wait for all this to settle out here. We're looking for something clean. You don't want to gamble. You don't want to run into the weekend on a loss. So if you take something that's clean. Look for something that's going to give you low-hanging fruit, as Michael would say, and low resistance. Does this look like low resistance to you? Does it look like it's reaching for logical arrays? See how we're already through this? We're already through the high, big wick. I want to see it. I want to see that our setup start happening in here now. And all this mess is not fun to see. Watch later this area right here. Keep your eyeballs right in here for later, just so I can say to you, oh, remember that little spot I was talking about way back when? This is the area I'll be talking about in the future. Hopefully, if it works out the way I want it to, that's what we're going to be looking for. Lambo, welcome, welcome. 33 watching. Well, you should have seen us yesterday. I think we had 93 people in here yesterday. I was shocked, Lambo. It was a very interesting day. I couldn't believe. I was trying to write down all these new people and say, oh, welcome. I'm just putting them in my book of, hey, here's a new person. I'm going to write you down. I want to acknowledge you. You're important to me. And then also people were pouring in, and I was like, I can't write as many names down. Where are they all coming from? And then we find out that apparently the YouTube algorithm was delivering our message out there. So it's starting to promote the channel now, which was really kind of a nice thing to see. See that first drive right off the opening? Boom. Now, if this is the indication that, hey, we're going higher, then the retracement back down, boom, and we're just going to push for higher and higher prices. This would be, look at this. Oh, look at this, ladies and gentlemen. Hello. Check this out. Watch this. Watch this. Let me get rid of all this stuff here. That is no longer necessary. But I will take this guy. This is the retracement we're looking for the next price leg up. Don't forget, my overall bias is higher for Nasdaq. I see Nasdaq going through the roof with AI and AI technology and how it continues to push a whole new innovative world. This is just going to go parabolic. This is the chart to be in. As far as I'm concerned, Nasdaq is the place you want to put your attention. That's technology and AI. It's just going to keep driving this market higher. So this objective, I'm going to come back to you guys in months from now and say, do you remember when we predicted that? Way back in that cluster. Where was the cluster? I think it was right in here. We were looking for that to finally break out of here. So anyway, not that being right matters, but right on. This is what we're looking for. I like this. So now we have an inversion here on a 1 hour chart. Take my 1 hour inversion. One hour inversion fair value gap. You see how it broke? I want you to see this. I want you to see how valuable these inversions are. There's your 1 hour inversion. See how we blew above it, came back, and look what did we do? Right there. We came back and tapped it and left on a 1 hour chart. I tell you, these inversions are amazing. The fair value gaps that are broken and you come back, find support, and push through, magic. They are awesome, awesome pieces of kit to use. So add them to your charts, add them to your templates, build whatever color floats your boat. And just a suggestion, if you guys are doing that, I'll kind of give you an idea what I like to do. I like to go to the background here, and I go, my times are based on hours. This will be minutes section in here. And you'll go into like a 15-minute color, and you can put in here, like this is a fair value gap. That's a fair value gap that's now been filled, so an inversion. This would be a whatever you want. You can just, on that 15-minute chart, you can put each one of these colors that represent different types of PD arrays, so that when you look at them and you get used to these colors after a while, you go, oh, that's a daily fair value gap. Oh, that's a daily inversion we're coming up to. Watching that from a 1 minute chart, you'll recognize your colors. But anyway, that's how I use it. If it helps. If it helps, we're only here to help. Anyway, let's get back into... Oh, look at that carrot. He's eager to get the carrot. So now, get this one out of the way. And I look at this and I go, okay, premium discount. This is equilibrium. I want to see discount arrays. So we've got a big freaking breaker right here. Well, this would be the breaker. We have a swing point here. Breaker, run up above this old high. Breaker ends up right on the bottom of this inversion. So I want to see this thing keep pushing higher now, because I need this to be a discount array. So we're aiming for, well, that leg's already been taken out. Remove, which one do we have? Way up there, right? 15,386. Let me put that on all my charts. Visual order. All intervals. I don't know why it doesn't turn up on this one. Nasdaq, March. Yeah, you don't want it to be just a return to a equilibrium. If it is, then we can build something from that. It's not super clean just yet. if you did get a reaction off that 1 minute or that 1 hour, if you're trading the 1 hour and you took your long there, aiming for there, congratulations. That was a perfectly, if you're trading on an hourly basis and you catch that on the hourly basis and you go, that would be this perfect little inversion right here. We catch it back into for a long, hells yeah. And now that I think about it, it's a perfect place. We swept a low, had a fair value gap, ran above it. The moment you trade back into it, so once you have a body there, you trade back into it, you can go long for that high there. It came back and did not tap, did not, made new highs, came back, tapped it, and then, as my friend in Spain would say, Mr. Victor, hasta la vista, baby. It left. I didn't see that this morning. I saw drew it out, but didn't recognize, hey, look, we just ran a low. That would be a great place to find support to run an old high out. And if you're running out that recent high, because you've already run these highs out, from there to there's 22. Well, that's 53 handles just on that 1, 2, 3, 4, 5, 6 minutes. 53 handles. That's like a whole week's worth of wages for somebody. Because you patiently wait for an optimum setup. I didn't see that one, so I could only look at it after the fact and say, yep, that makes sense considering we just took a low out, fair value gap, above it, wait for it to trade back into it, go long, reach and aim for the nearest high. It is. That inversion fair value gap is it. Commander. I use it the same way. I'm going long to the carrot. Stoic, get in there, buddy. Get in there. Stoic is selling carrots, man. I got carrots for sale. I'm going long. Rafiq. Still didn't break any significant high. No, I think I was calling down on this one. That order block holds price. We're hoping that Nasdaq will continue to all boats rise in high tides. You're hoping that it starts to lift it. But this morning when we're looking at this one, we're looking for a return to breaker. Sorry, not breaker. Order block. Inversion. We've run through it. We're sitting in here right now. So Rafiq, you don't know, you've got to ask yourself, am I going long or am I going short? If I'm going long, I've got to get above this daily fair value gap on the daily. If your bias is to say this, look, I'm looking for the next price leg way up here. Like I'm looking for this to run up higher now, good. If that's your objective, is it validated on all the other time frames to support that run? If it's not, and you haven't found the optimum place to get in on that yet, like for me, I would have to go, all right, so if that's my objective to go long, I'd wait for today to close, because you're in a long-term trade. You're not into scalping. You're into swing trading. So I would wait for it to close. And if it closed above that, I would look for something on the lower time frame that is inside this inversion to trade back to go long. And then I would use the lower time frames to support a continuation for a run above those highs and making sure that I still have it. And make sure your stop losses really trail behind you. You wouldn't be doing the kind of trailing we're doing here. You'd look for bigger ranges and make sure that I still support 50%, 62%, looking for a retracement back into here, blah, blah, blah. I want to see that get taken. So there's a whole strategy you'd have to develop around a longer time frame swing trade. But right now, that's the guy you're looking for. Look back here. Premium and discount. We've got a swing point. 50% is right on top of that inversion. So this would be a great place for it to come back into. Find some support. Anywhere inside that to go long. If you blew through that on the wrong side and it closes below it, close out your trade. Your stop loss is sitting down here, but if it runs to the other side of it, then you're looking for a deeper run into here. And that's right off 50%, so that's a beautiful place for it to come back to. Order block, validated it, come back inside it, pop down. Algorithm is working. Each one of these wicks is working where it's supposed to. Body respects it, pops up. There's no inversions or anything inside here. No fair value gaps except for this one here. Yes, that is a fair value gap. It's a reprice, rebalance. So I want to see it start to climb below that, pop in there, and start pushing for the 50%. Or if a big wick would get down here, come back up, close above that. These wicks are what Michael spent a very small amount of time on. But they're like a fair value gap. When you see a wick through the other side, a reprice, a rebalance. Use that AI tool I gave you yesterday to look up what reprice, rebalance means. Keep it germane. Take Michael's view over mine. Trade back into order blocks body. Looking for lower. $21, this is a turn point. So you're looking for lower prices right now. I wonder what his feelings are right now. The guy, remember the guy who closed the long at 27.25. I don't know that guy. That's an interesting question, Victor. I wonder what his feelings are right now. I hope his feelings are, I'm happy. I'm absolutely happy with the decision I made at the time. Here's a problem. A thing. Here's a insight. My engineer friend, Mataxas Gamvralis. He's a cool guy. Tex, if you're listening, I love you, buddy. Tex and I have been friends since we were kids, and he's an engineer, and he came up with this really interesting point of view, and it's something that I found was really kind of insightful. And we're all kind of guilty of it at some point in our life, and that was kind of if you make a decision based on the information you have today, don't judge it tomorrow when you have new information. Because that's just a futile act. It's like saying, I should have done something different. Well, you're saying I should have done something different, and you're punishing a decision you made in the past on a decision on new information you have now that you didn't have when you made the decision. So don't ever look back at something and say, oh, I should have taken that high. And you heard me saying it yesterday even, like, oh, I should have stayed in there, right? I should have believed in myself is what I'm looking for. So we come back and tap that 50%. Now we could leave right from here, not even fill that fair value gap. I'd be okay with that. And you see that swing point I was calling? Funny, hey? Why is that? Why did we know that was going to happen? How on earth did you know that candle was going to turn right there? So so don't beat yourself up. You make a decision, just say, hey, look, it worked out. And it worked out so well, I could have stayed in that longer. Oh, well, what decision? Now go back and reanalyze what decision could I have made in the past that would have better affected the outcome? And don't beat yourself up. Positive. Theta wave mindset. You got to get in that mental flow, that peak theta wave state in your brain where you can't ever go wrong. You believe in yourself, you believe in everything you do, everything you say, and then have the freedom to change your mind in the future when you find new information. I always believe that. I think I learned that from Tony Robbins. That I absolutely will not give you information I don't believe is true, but I've reserved the right to change my mind if I learn something new tomorrow. I am not going to stick in a belief that doesn't serve me. I'm not going to die on a hill of old beliefs when new beliefs or new understandings point me in a better direction. You've got to stay flexible. Continuous and never-ending improvement, my friends. So, see how that came back to the 50%? Tapped it. Order block's now valid. Look for this order block to provide some price. Look for, we're between this guy here now and that guy right there. That's the small range you're in. Premium, discount, like a raise. This little guy here, we've eaten through the body of it, so now we're into the premium portion. So now you're going to see, or we're going to watch to see if this high gets taken, that mean threshold gets taken, and we want to see further upside. So if we're going to see this pushing through for the next price leg up, we want to see that mean threshold get taken on a close, because then your bud is next. 1, 2, 3 on a close, look for higher prices. But see if the mean threshold holds price, then we're back to this order block. So again, we're between these two here. So this is where you can see that the start of the consolidation. So you can anticipate the consolidation happening by simply watching the range you're in. Watch the arrays that are the senior arrays. And when I look at it, when I think of a senior array, I look at a breaker as a senior array. It's the head honcho. It's the one that's got the majority of the strength. I look for inversions. Inversions have tremendous amount of strength. So they're, for me, a senior array. I know Michael doesn't call them senior arrays, but those are the stronger ones he refers to. So we have a breaker, last down close candle before run above this little high here, right? People think, oh, it's above there. No, it's above the previous swing point. Look at the definition. You'll see. We come back, we tap it. Look at that, right there. Bang. Right on it. Now you're stuck between these two dudes. That guy's a breaker because it ran that low. This guy's a breaker, ran that high. So, we're in a war. So now can we go into consolidation? Then we're expected to go into compression. Now we validated this guy. Does this candle hold price? And we start to move into a smaller consolidation. And we're inside this little fair value gap here. So from there to there, if that candle closes, there's a little swing point. I want to see that push through there. Or if that holds, then we're back into what have I got inside this range that supports price? Well, that's only that guy there and that inversion. Well, that, sorry, not inversion, that BISI. So we created a fair value gap there. We came back in, tapped it right on a breaker. Now you're looking for this breaker to either give way. We have the next PD array above it, which is the rejection block, rejection block. So if we go into a consolidation, watch for like array to like array. This goes into a consolidation now. And when you see these small little candles forming, I expect this to be a little bull flag type of idea. So I want to see this really blow through that mean threshold. Otherwise, I'm still inside this little range. And that's the consolidation. And the advanced, when you read advanced reading on consolidations, that's what you got to get into. You got to dig into senior arrays. You've got to dig into highs, lows, swing points. What arrays sit inside that? What's a logical place for it to reach for? And when that runs out of arrays, you'll see it compressing, and one candle will go bang between one and bang the other, and it will sit there. The wick will hit the mean threshold, and you go, haha, now a little algorithm, what are you going to do now? You've run out of arrays to bounce to. You either have to push out further to the outside or extend your range. Okay, so kind of keep that in mind. So watch what happens at this little this BISI here. We're back into it again. Then you got to go, I got to dig down deeper into an array because I'm in a small little range here and I'm in a premium portion. I got to get down to a discount portion, which would be somewhere in this close of this or the mean threshold of that candle. Watch when I stretch this out, you'll get a better idea of what it is I'm talking about. And this is kind of the hyper focus you got to have for your range. If this stays open, it's like a breakaway gap, right? We want to see this high get taken out. Then we want to see that high get taken out. No different than if this was huge, huge candles. We're just seeing a smaller version of it right here. So if you want to take out that high, do we come back to a discount first and then run for higher prices inside a breaker, which we know is a senior array? Victor, were you the guy they were talking about? Oh, it was you. You're talking about yourself. 27.25. What was the 27.25 one? There's the lower, there's the discount array. Now we want to see that hold price or push right through it and drive down inside a bigger array because we're in a premium of a larger array. That gives way now. See how it closed? Now we're looking for, you're back into the bigger array, and now you're looking for a deeper discount inside there. Pull your fib tool from top to bottom and you look for 50% or more. There's your 50%. We just ran over it now. We're into that little portion we talked about earlier. We wanted to see it get back in there. But I just want you to see that this retracement was a logical level of retracement. It was here to here, hit that, came back in here, started playing around on top of that order block. Then when it gave you this hint that I'm not even going to hold on to this thing, through 3 arrays in one candle, 1, 2, 3, closed on it. Your ass is next. Right through you. Got it? That's your range. Yeah, well, I don't understand what your 27.25 is. Am I reading that wrong? I'm not sure. Sorry, Victor. I don't understand what it is you're saying. And I'm not beating you up and I'm not judging you. So, and I don't want to see you judge you either. You made your decision. Stick with it, my friend. Roll. Water off a duck's back. Roll with it. Develop your plan. Trade your plan. If it fails, if you were going long there and that failed, get out. Right there. It broke the mean threshold. That's right. If it turns around and shot back up, that's okay. That's your rule. Wait for your next setup. Don't beat yourself up or say, okay, I'll get back in sync with the market again. That right there was a reversal inside this larger range. So that does not support a higher price. There's your rule, not your rule, my rule. And it doesn't have to be your rule, but that's I see that inversion. We trade below the inversion if you want to do that. Close below it. You're hoping if you put your long there that it would come back and get you out. If it doesn't and trades below, it takes your stop loss. That's one of those ones you don't get the opportunity to unload your position long quickly. It just comes down and takes your stop. That's okay. Move to the sidelines. It's all about how much leverage you put on then. If you're greedy and went for the stars and you overshot 2 or 3%, you just took a big hit. Order block, mean threshold. See that? This guy's holding price, and it's the breaker we talked about, remember? Swing point, breaker, runs above old high. Breaker's a senior array. Mean threshold, hold price. We're getting a nice snap off of that right now. So what are we looking for? Range, high, range, low. And this is the Crazy Ivan. Crazy Ivan. Con Sonar, Crazy Ivan. So the next 6 minutes, we should see the candles starting to look back. It's the drive. Mean threshold. Bigger order block candle in this big swing here. Look for 50%, 62%. When you start to lose your optimum trade entry, right off the order block down here. We've eaten through this one again. We haven't had a body close below the threshold yet. We've certainly had we've been eaten into it once, eaten into it twice. We want to see this create a swing point here now. This, over the next couple of minutes, we should see a swing point here. $34 to 36, we could see the crazy Ivan going on in here for a look back, and whether or not he sees you and comes back for you, or we have the next price leg down running for the next low. Inversion. We've taken out a low. This guy here, if we trade through him, come back to him, that's a potential long. So where this candle closes right now is what my decision will be. I will go long inside here if we get above it. We get a candle that closes above. And I don't want to see that high get taken out first, though. We'll see where that one ends up. And you don't jump on it too soon. You wait for confirmation, and then your rule has to be, I have to hold that thought. It has to hold me in place now, and I have to continue to the upside. If it doesn't, this is the crazy Ivan, the reversal, and then the continuation on the downside. Where shall it close? Where will it close? 3, 2, 1. Ah, we are still waiting. We are still waiting. Now, this could be a classic crazy Ivan here. Just look back, look down, and start driving all the way back down. That's an affectionate term from the movie Hunt for Red October, in case you're wondering where that comes from. Where they were calling sonar Crazy Ivan, where they're following that Russian sub. And it stops at the bottom of the hour and looks back over its shoulder to see if anybody's following it, and then it continues on. That's what it affectionately calls this. No disrespect for our Russian friend at all. It's the poke back that you'll see at the bottom of the hour from the movie reference, and then the continuation, or if it comes back and sees you right here, comes back and takes you out that way. Here's the confirmation. We need to get a body above that. If he doesn't now and comes back, he's just looked over his shoulder, and continuation on the downside. Lots of liquidity and an open range gap below. For sure. See how you could say to yourself, this is the proof I need to go long back for these highs again, and if it's not, then I'm out of there. I'm thinking more downside, and this is too much chop for me. I want to be able to see something cleaner. So we're back into this inversion right here. So what I want to see now is I want to see this bust through here, come back and use this as support to continue on the downside. You want to see that stay open now. This breaker, that's a last down close candle before I run above these little high here, ran up. So smart money reversal, low risk sell, accumulation, back to a breaker, distribution, second level of accumulation, boom, a huge rundown of your second level distribution is your unicorn trade. So you're kind of looking for the unicorn happening in here now. This would be a very delicious look. Mapping this out right now. Our crazy Ivan into our breaker, and then just a pop through here, come back up, tap it one more time, and then you see this mighty hammer candle that just drives all the way down. That's what I love to see. Now you guys are gonna think I'm freaking a wizard if you see that. But that's what you almost have to appreciate, the accumulation distribution. Now this can come all the way back into that whole breaker, all the way back up in here, and it can fill this fair value gap, I suppose. I'd like to see it stay open just to kind of give us a little bit more juice. The mean threshold of that breaker would be nice. There's also that little imbalance sitting right in here. Key levels to look on. I'm gonna run to the bathroom. I'll be back shortly, but kind of keep those ideas in mind. And we still have this turn that occurred. Look for that guy there. Big body above it. Come back. Might be running for a higher array inside this little range here. You're on the horse. You're getting bucked around now. You're getting they're really shaking you up to try and get you off. Richelieu. Liquidity of the open gap. Lots of liquidity in the opening gaps. Market maker sell model. Lori, how you doing, buddy? Good morning. Trading CFD. I went long on the US 50, Nasdaq 100, and the US PA in a mess. We went long on the 500 and Nasdaq. Moby Dick. Come on, close the door. Price action really respecting 50% of the inversion fair value gap. See, I have a body close above it right here. It's tiny, and whether or not you want to play, you want to ride on those ones, then great. Be real careful about how you're going to manage your trade, though. Okay, so there's the inversion. Let me just draw this out so you'll see that there's a level of precision here that you can see that's very, very sexy, let me tell you. There's the body closed above it. Come back in, tap it, and you're heading back up. First order of get the hell out right there, or there, whatever your three levels are here. Order block, highs. If you're going longer, Lori's all over that. If that's Lori's entry, he did it again. He's in for another nice little run up. Our objective up here, long term, that's supported by a long. And now you can take your stop loss that we're sitting here, blammo, turn it into a zero stress trade and just watch and see where this thing goes. If it comes back and takes you out, who cares? We got lots of opportunities like this that will turn up over and over and over again. And no, I'm not going to run to the bathroom every single time you guys want to break out either. I haven't got that much in me. We'll just send Lori to the kitchen. How's that? So you've run a high, that's another objective. We've got equal highs now. Are we going to turn around here, come back into the range again? And then you're going to ask yourself, why didn't you get out of the rejection block and inside the mean threshold of a breaker? Or, again, our objective, if your higher time frame objective, this won't matter. You'll just go, hey, all the time I'm aiming for that line because I'm anticipating that being the next higher time frame premise. I've got my entry in with precision here. I'm in zero stress now. I'll let this baby ride all day long. Have a nice day. Send Lori to the kitchen and make you some breakfast. He can sit there with a smile on his face as his trade continues higher. But again, you've got to have a fail point. So now let's say you're in this trade. What's your fail point? When does this turn into, it's going to come back and take me out? Or am I happy with that piece? Did I take a piece off there? If I didn't and it comes back and takes me out and I throw away all that profit, that's where your brain starts to beat yourself up. Say, why didn't I? Because this is the new information you're getting now. And you're judging an old decision to go along. Well, there's a logical place. We have senior array that is strong and can hold price. So do you want to pay yourself there, or do you want to just keep reaching for the bigger bucks? Or do you want to leave your stop loss down here because your objective is higher over a longer period of time and you're willing to weather this stuff? If you're a sniper, you're snipe from here, that entry there, which had almost zero drawdown from 65 to the mean threshold of that, is 22 handles. Come back, fill the fair value gap. Now you want to see that leave. You do not want to get on the other side of this. Otherwise, we're back into the consolidation again. And we've got engineered liquidity above you. So eventually you want to see it run back up there. But now you say to yourself, oh, look, I could have grabbed 22 handles there and re-entered back down at a logical level here. Right there. So if it fails and we close below it and it tops back up, you can get out and it didn't cost you anything. Because you're right in a discount array. I think that's a discount array. It looks like a discount array. 50% right on the money. And then you're going to see that array up there. Again, all I'm trying to do is preach to you guys about having a trade plan. Where it fails, are you long, are you short, are you long term, are you short term, are you sniping off of key levels, and you're missing this, and you're now going back and you've eaten up some of your profits right here. You say, I wanted that profit, I want to reload in again down here. That's fine. Start looking at your senior arrays inside ranges and see how they support or deny price. We have not taken an old high, so we're not looking for a reversal pattern that we had here when we took this low, because that high is not taken out yet. I guess you could technically say that's a swing point there, but you want a significant. Don't try to form fit your thing. Just say, look, I want to see a significant high get taken out, and that's not. We've come back into here, so now you want to see this push all the way up into here through that order block, or we're going to bounce now off of here and back into where this candle doesn't count. The fair value gap counts. We've just traded back into it, tapped it, and now we're looking for lower prices. Now we don't want it to close below here. If it did, and this was your entry, like we were just talking about, I hope this kind of works out so you see, but doesn't take your people out that long. If we close below this, as soon as it closes back into that, or it runs back into it, you'd get the trade that you had long out of that, and you'd move to the sidelines and wait. You wouldn't. I would. Just my idea. See, you only want to see it tap. I'm losing faith in it already. Okay, so it's already come down and tapped and started to leave, and now it's coming back into it again. Why? You don't need to come back into it. You just came back into a fair value gap tappage. So now I'm looking for a deeper discount. That 50% is not enough anymore. Do I need just to roll over it? Grab it. I'm still inside this person or this one here. Snap back. Go, go, go. Where's the carrot? I need a little temptation. This next candle should create a swing point. Macro is just starting up now, so now we're expecting a spooling to occur. And if our macro is going to spool, we want to see it spool through here and close above here. See, this is what's so awesome about the trade I just showed you. You took out from there. If you entered in here, took out there, got back in right there where we were just talking about, you'd had a little bit of drawdown, and now you're in profit again. Again, you want to see this get through here and here. Otherwise, we got a little consolidation starting all over again. So there's the low. What you want to see is 3 arrays all at once and a close, and you say, haha. Your ass is next. That's mine. Order block validated now. We're between here and here. Small little range. Popped up. It's not a breaker, so it's weaker. There's a second array. Mean threshold. It's a weaker, it's not a senior array. Mean threshold. Still hold, get back into consolidation, come back to here. So you're between those two. See that? Mean threshold holds. Bodies are still respecting it. Candle's not finished yet. But now we're in a small little tiny range inside of fair value gap, which is in the middle of that whole freaking range. So are we above it or are we below it? See how we've just, right now we've traded on it. And now we've closed on the inside of it. So you want to see this push through here now. Go, go, go. That literally closed on the high of that inversion and then opened and took off. Now we've just taken the highs. There you go. See how it follows a logical pattern. Things that you're looking for to support price. It supports price right there. And we're calling this as it's happening on each candle. So looking for this inversion to hold price to continue to the upside. Now you want to see this order block, whole price, and this inversion now whole price. Now we're looking for that stepping thing that Lambo was just mentioning earlier about finding the step. Get that step on here. You don't want to see it come marching. So now we're into the rejection block. You don't take the high. It can totally hit that. Turn around now, come all the way back down into a deeper discount. Just to throw you off, turn around and say, oh, it's not running for the highs. But we've still got support. So we want to see this provide support for the continued upside. So for me, my fail point is here. Keep going. Come get you some carrot, my friend. Then, what do you want to do? What do you look for next? What's the next candle that pops into your head? Right there. We get a body trading above it. That now becomes our breaker, swing point, breaker that provides a level of support we're hoping to get further up on. Looking for an upside objective for the day, being bullish. Does that make sense to you guys? Hi, Bum. Welcome. Good morning. Immediately rebalance on a higher time frame, produced a smaller, lower time frame. Rebalances, smooth equal highs in place. Is it possible to use darker color for the consequent encroachments, please? Up and away. Sorry, unfortunately, that's the color I use. It'll screw up my whole template here. Now this is the inversion. This will be a little darker. 1 minute inversion. It's slightly darker. Right here. That's an inversion. Inversion. So you want to find this. Now we've got a body, you haven't got a body above it. Well, you always want to see a body break above the high, not just a wick. So remember, if you're long from down here, you weathered this, no problem, nothing wrong with that, weathering that. But look for, again, doesn't just run to a straight all the time, run for the high, right? You'll see this retracement back into a range, a 50% of a range, inside a fair value gap, rebalance, inside an inversion, and a continuation. So you'll see these banging around from PD array to PD array, and they do make sense. Don't think these candles are all just obscure randomness and chaoticness. It's not. Each candle is telling you a story, and each candle will let you know what it's doing. If it's changed its mind, that low will get broken and you'll start coming back down the other way. If it's supported, wicks do the damage, body is still supporting inside, and we continue to the upside. And that, if that's your objective, again, because you're in this consolidation, if you're trying to scalp and you've got in here, you're aiming for objective 1, which is those equal highs, objective 2 up here if you're scaling that out. Otherwise, now you've got this bigger range right here, and this is a discount array. Discount array from here to here. 50%'s here. We dip into the order block inside this breaker here still. And that can come all the way down to here. A 62% retracement back into this inversion again. There's a small little imbalance right here, abyssy, for continuation on the upside. Those are your fail points. So for me, if I lose this, you're going to say, why didn't I take scale out here? Michael always says about scaling out profits, right? If you're a scalper, and again, I will reiterate, if you're a scalper and you're reaching for these pieces, you're taking 20, 30 handles at a time. You do this a dozen times in a day, you're getting the same kind of returns on the people who are going for the big bomb 100 handles in a day, well, good for you. You can still accumulate that by watching these PD arrays going from premium to discount, a logical discount. Derek loves to do this. I love this about Derek's trading is he'll look at a small range like this and he'll say, I like to go to a discount. If I'm going to go back to a higher premium array, I want a discount so I can run back up there, even if it's just inside that, and I can pull to a break even and see if it pushes higher or take out at a higher array for a quick couple $100. I tell you, nibbling away at the cheese, it's like they say, how do you eat an elephant? One bite at a time. And preferably from the front. I like this. Again, stick with your breaker, take your breaker, draw it across like this. There, and I'm just going to change the color up for breaker. Are we inside this breaker here? Yep. Have we traded a body above here yet? No. We have wicked above it. I like bodies, not wicks. Wicks are stop runs, and they're not as strong as, and this is just for me, just my personal opinion. If yours varies, that's okay. You're allowed to disagree. Again, higher time frame objective. I'd like it to go higher. So we're definitely getting bullish support here for sure of all this stuff. Order block validated now. We have a small little fair value gap sitting right in here. It's 11 o'clock. This could be your silver bullet for further upside. Stop loss would go right here. Come get you some carrot. Does this make sense to you guys? Google Assistant just told me it was scrambled eggs time. Be back in a few minutes. Go fuel up, Derek. Go fuel up, buddy. Howdy. P Trading. Good morning. Where are the ideal entries? Market is loving that carrot. Yeah, that little gap was just a beautiful entry, Lauriston. You know, they caught a really perfect entry. So, Stoic, Jack, if you're looking for ideal entries, I've been trying to give you the ideal entries. So, your ideal entry is inside here with a stop loss here. Ideal entry I gave you was right there. For once you took that objective there inside this range, fair value gap. Right here, if you close below it, you can get out. So that's an ideal entry right there. Fair value gap, break above it. Unfortunately, with the body didn't close above, so you could get in as an ideal entry here. This would be an ideal entry if the body popped just above it. This one opened, come back, tapped it. That's an ideal entry for a long. Range from here to here, 50%. You pull your fib tools all the time. 50%. You dipped into 50% back into the order block, inside the breaker, off to the races you go. Again, I like a body above here, not a wick. Now we've got some bodies above it, so this is really nice. Another ideal entry would be right there, right off the top of that breaker. There's a little fair value gap in there. Return to here. Stop loss goes here. Run up higher. Come get you some. Come get you some carrot. Now this is a level of precision you're going to see when you study every candle. Now this is where Michael has told you guys a million times You got to get in the charts. You got to study price action. And if this is too all over the place for you, it's not your place to sit in a 1 minute chart. Then that's fine. Go to a higher time frame and slow it down a bit more for you. But the setups, exactly what I'm pointing at here, is exactly the same on any chart, any asset class, stock, ETF, index, you name it. This is how you read price action. Minute by minute, day by day, whatever. It's exactly the same thing. And we're staying on the horse right now. We're staying on the horse. Since this entry here, we're on the horse. It's trying to shake us loose. We're staying on the horse. On a 1 minute chart. Look at this as a daily chart if you want. There's no difference. That's a daily chart and you bought in right there and you went long for that high there and that was your stock. That was your Tesla stock, or that was your Bell, or wherever it is that you're from, your main stock, and you see that kind of setup and you go, I'm going long there and I'm buying 50,000 shares of this company, or 10,000 or $1, you're going to make your dollar back. If your stop loss is sitting right below, watching that inversion now, if we traded below it, came back up to it, your stop loss is tight. You can get out of it before your stop loss is just right here. That may be a couple of bucks down from you. But now all of a sudden you're looking back 2 weeks, 3 weeks later going, oh man, I'm so glad I learned that 1 minute by minute study. If you don't believe me, go into any one of your stocks and you'll see these setups. Guaranteed. Got to move the carrot. Guaranteed you'll see them over and over and over again. This is going to make you a better trader of all your assets. Your options trading will get better. Once you understand price action, you can throw away all those thoughts about boardroom meetings. Who said this? Who said that? Did I give you anything in here that would indicate that there was a fundamental example that proved that entry point was perfect? Did we bring up any boardroom meeting of any major companies? We're talking about the 100 top companies of the Nasdaq tech. Is this fluke? Is this just guessing? And I'm not trying to mock people who do fundamentals, because God bless you, man. That is a world of pain. I look at it and I go, there's nothing in there that tells me fundamentals said, get in right there. Fundamentals say, well, it looks good today, or sorry, I'm being vague. I don't mean to disrespect all of you who do fundamentals. But fundamentals had zero to do with this. The news had zero to do with this. The world economy, all that crap had nothing to do with that entry at that time. That is purely algorithmic delivery. And when you see it and you understand it and you look for the arrays that it's set up, we were looking for this setup right here, this to happen in here. Didn't happen, so we were saying, okay, we're stuck on this guy. Mean threshold, it holds. And we're like, okay, well, look, it popped back up there. Darren went for a peek, came back, it left. That's the entry we were looking for over here before it happened. Nothing in the fundamental world told us that was going to happen. If it did, I missed it. I didn't get the news. I didn't get the bulletin. I didn't take the trade. It wasn't for a B, but whatever. Lori got it. Some of you guys got it. But look for these things. Doesn't matter whether or not I took it. I just want you to see the logic. What I do with the trades is irrelevant. I want to show you guys this. This is not about me and how much I can make an account grow. It's about trying to show you guys how to read the tapes. And if I take a trade and it pays off, big deal. Watch what we're doing here. See the logic in it. And if you do see the logic in it, you're going to hopefully take the right chances. D, we hit your 19,000 target today. My 19,000. 19XX target today. Oh, we might hit it today. Oh, I don't know if we'll hit it today. That's 800 handles ahead of us. I don't think we'll get that today. Maybe next week. I don't doubt that that objective is going to get hit eventually. I just want this objective to get hit today so we can just walk into the sunset. Laurie takes his bags of cash into the kitchen with him and hides them in the freezer. And we smile. We go into the weekend knowing that we're on this trade. Now from here, if you're trading your long on that and you're on the hourly, you're saying to yourself, I want to see this fair value gap hold price now. Whatever your entry was, you want to stay below that potential run back to this order block breaker right here. So I would put my stop loss below there. I'd slowly creep it up on the hourly basis. On this basis, I would have it sitting right here off this breaker because we've already ran through it and we're off to the races there. This is all bull candles, so the only downside candle you got is right here. So look at the range you're in right now and say, if we had a big massive retracement right now, usually what happens in the 11 o'clock hour, we'll see a big retracement, a 62% or 50% retracement inside that hour. It didn't quite reach my entry either, but has hit lower, so I market execution on the US 500. Missed my long in ES. Yeah, it doesn't matter if you miss it. We're on a minute chart, man. There's always going to be something. There's always going to be something. This is where you can start saying, I can not worry about these candles that take off on us. They mean nothing. If they take off on you, who cares, man? They're going to come back inside the range. Get yourself a discount. We call it the Derek discount. Get yourself a nice little delicious discount and move off into a higher time frame premise. Again, always have your execution rule for where it fails. You got to have it and keep that rule as a rule. All the other stuff comes in, it messes with your mindset. Follow your rule. Toss away moving averages, and then you get to use an anticipated and anticipate what the news is going to do. Yeah, moving averages, if you guys are into moving averages, bless you. I built bots around moving averages and they never paid dividends. I spent months trying to form fit stuff to moving averages and gave up on it. And I've built a lot of bots in my time, and unfortunately we can't build them in PineScript, otherwise I would build a silver bullet bot for sure. To price action. D, can you show your measure move fib projection? Measured move fib projection. Well, you got this one here, so we have a consolidation in here. Leg that takes out the consolidation. You want this kind of thing, so you've got from high to low. Sorry, let me get this wrong one. We'll just pull this one. There's your 4-banger right there. Boom. Right on the money. There's your 4-banger. That's the projection off of the 830. Take out the lows, the high to low. You run that out, come back inside it. There's 50% of that range. If that's your whole consolidation, there's a Model 2 entry. Or if you want that to be your consolidation, it's a Model 1 entry. Your swing projection for the day, if you're anticipating higher prices and you're in that, you're literally carrying that trade for 4-banger all the way up to here. That would be your logical place to finish off up there. Or did you want me to show you the projection on the weekly chart back here? Why I got that level? Is that what you're looking for? Right here, consolidation, leg that goes down, high to low, 4-banger right there. That's the high, right on the money. So if you took that consolidation you have here, the run above, come all the way back down, the leg that takes out the consolidation, you run back up inside it. There's a Model 2 and a Model 1. Come back to the high. That's a CAM Model 1. CAM Model 2 is 50% of that consolidation, and CAM Model 3 would be 50% of the leg that takes it out. This is a daily candle. Imagine, this is like the 1-minute chart. This shit happens on daily candles as well, and it does it on weekly, all the way through. And we were showing you on a 1-minute, but look, this is the same thing. There's a CAM Model 2 right there, or CAM Model 1. You may not get the 2. No, you would have got the 1 for sure. And you do that for a 4-banger back here in March of this year, and you caught that big skookum run up to 4. And you do Michael's principle on how to manage a long trade. You do the 41-21. Do you guys remember that? If you don't, go to the index and do long trades. When you do mega trades, how far to trail your stop loss behind. Remember the 41-21 or 40-21 rule. Anyway, that's that. So price leg. Here's the price leg 1, price leg 2. So this is where I get my other one from. And this again, just a guess. Price leg 1, price leg 2. Okay, so now you get my idea of where I'm going for upside. I share all my secrets with you. It's not my secrets, they're just Michael's stuff. E-mini S&P, what are you up to? Look at that little piece right there. See that? Right there. What a beautiful entry for a short. Right there. Stop loss will go just above there for continuation on the downside. Right off that little baby right there. Order block. You want to see this give way now? You want to see this inversion give way? Come back, find support at that. That'll help to reinforce that idea for a short, if this is a turn point. We have no break in market structure though, just so you're aware. We'd have to break market structure to the downside and then come back and find some support inside it typically, but I do like that idea that if this is a swing point right here for that trade to go short right at that little inversion, a little imbalance there. And again, it's easy for me to say that because I'm showing you in hindsight, but also fair value gap fill. You're really inside here now. If that wants to go higher, you want to see the top side give way. If you want to see it go lower, you want to see the bottom side give way. Come back and find support at it. So which side? You can argue both sides of it. we're in a bullish trend. Everything's rising, so I changed my mind. It's probably going to keep going up just because everything's bullish right now. And we've come back to this order block, found support off of this. And now if you get some more support on top of that, upside, stop loss goes below the low here. Let's get back on the horse. Order block, fair value gap, order block, mean threshold, lost. So you know you're going to the upside. If we do a retracement back into fair value gap, mean threshold, upside. Makes sense. That whole thing makes total sense there. Saying, I'm not quite taking the high yet. I want to come back, get a little discount first inside of fair value gap. Now I'm out of here because I've already broke the mean threshold. I've given you an indication that I'm going to take the high, but maybe I want to come back, get a little discount first. And then I want to run. That stays open, breakaway gap. Have a nice day. Are you enjoying your entry way back here? If you're still on that, are you enjoying your entry right here? Like, you want to talk precision, folks? Hot diggity damn. There's like major, beautiful entries. You practice these every day. You'll see them. You'll get them. Mr. T, well, I haven't seen you for a few days. Welcome. Good to see you, buddy. Great call. Spot on. Is it a good idea to use EMAs on futures? I never use EMAs. I can't give you, Moby, I can't give you an honest opinion on that, buddy. As you can see, I've never used the moving average at all. It's just clutter. It's just more stuff to cloud up what you're looking at. We're looking at every single candle forming, and we're looking at every single array that it should or should not reach for. And if every one that I've called, you've seen it hitting them and then moving away from them, looking inside ranges. It comes back to logical levels. Every single candle has its place. It does its thing. And has zero to do. This had zero to do with moving averages. That had zero to do with moving averages. That had zero to do with moving averages. And if you find a correlation in there and it works for you, and an RSI indicator or whatever those other indicators are that prove things, go for them. Use them. If they work for you, great. They're not ICT things. That's all I know. And all I'm here to share with you is ICT stuff. If you guys have got lots of other ideas using the other stuff, then bless you. Unfortunately, I'm not going to show it in here. But if it works for you, keep it. And nobody else in here, I'm not going to share ideas that aren't ICT. I want to keep this germane to ICT stuff only. So if you've got other tools you're using that you're augmenting ICT stuff with, keep them to yourself. If you find somebody that's interested in them, DM them on the side and chat with it. But let's keep it pure germane ICT stuff in here. And hopefully I can show you that you don't need any of that stuff to read the charts and to stay on the horse, or on the bull in this case. We're bull riding right now. This bull's getting exhausted trying to shake us off, and we're staying on her. Range, premium, discount. Premium array, discount array. Is it possible that we could come all the way down into here? So think about your range. Back into here. You don't want to lose this one for sure. Otherwise we're running into a higher range and saying, what's my next array? Remember I was mentioning with all these bull candles, all we got is back here. There's a little imbalance right there. So you don't want to see that lose, otherwise you think it was a deep retracement and we break market structure to the downside. So you definitely don't want to lose this candle. But is it acceptable from premium to discount array? Absolutely. One there, one there. Like array to like array. You're going to hear me say that so many times. Like to like. Premium, discount. Right in here, equilibrium. Order block, 50%. Hold that, go. That would be awesome if it held right there and that stayed open. Breakaway gap, stay open. Find support at this, now start pushing through. You want to get on the other side of this inversion. Now we've created a little inversion there. We've wicked through it. Want to see the body. If we're going down here, give me a wick and then get out of there. Close back up here. If not, then we're going to come down to here. We want to see the body wick into here and then get on top of it again and start marching back up. So you've got this kind of pop and then run back up again. So it's like a step, step, step. Inside a range. 50. Strong. A little weaker. Really weak. Not a lot of joy in that. And line in the sand. You lose line in the sand and we just break below that. And if we break below it with a body, then it's a break in structure to the downside. A wick could be just a stop run. But if it wicks to, what is it wicking into? Reprice, rebalance this little chunk in here. So you see how complex your just a simple little trading idea can be, where you have to have your rules for failing and supporting. So far we're still coming back to the objective we're talking about. It's right there. We're inside it already now. Run that low, fill that idea right there. We'll put our little crosshairs on it. Tippy tappy. Now kick off of that and start going back up. I love seeing kick off of there. So if it drives down again, we don't want to see, you can come down to the opening if you like. I'm all right with that. And the line in the sand is there, and we don't want to see this close below here. So now you should see a turn in the next, this candle, the next couple of candles, we should see this turn point here at a logical discount array to continue higher. It's a good idea to use. Is it a good idea to use MAs? No. TYD. TYD. I'm sorry, I don't know what TYD is. TYD? Talk to you later, D. Maybe that's what it means. I-bomb retracted message. Arthur. Fib on the manipulation leg between 2:30 and 5:15 on the 15-minute chart matches perfectly with your fib on the consolidation to the tip. Same target level, drawdown, 15-minute bodies, not wicks. Excellent. Well, if it works, man, I'm happy. I'm glad you see it, Arthur. I'm glad you see it, my friend. Another high time frame that immediately rebalances has just been created bullish in the silver bullet. Yeah, if that's the 11-12, there's your silver bullet for a long. Actually, I might take that with you. I like that idea. And I'll just put my stop loss down here because I don't want to see that low get taken. So this body here, I want to see that hold price now. Yes, we know. Order block. I don't want to see this give way. We've got a little bit of padding in here now. We have an order block. We've got to get above it though. Just pop up there. It's not valid yet. And we're in this guy here. And if you understand anything about time and price, you can see why time and price align. Order block is now hit. So now we're stuck here and here. that guy. And we're in a premium of a huge range here. So we want to see this premium still hold price. I want to see this mean threshold give way. Start pushing for the carrot. I don't want to see that give way here. Again, line in the sand is down here, but I don't want to see that. Revisit this inversion. Fill it. We get above it again. You can come back to it, find support, keep going. I can see the problem though is we have the same thing happening on the reverse side. We have a high taken with a fair value gap. We've traded below it. Now we're trading back into it to get short. So you can almost argue both sides of that. And I can, so I'm going to get out. I'm going to get out. If I can argue it, if it takes off, that's fine. I can argue both sides, so I'm out. Take my $100, move to the sidelines. We're into that order block there. So discount, go to a little quick premium, grab your money, move to the sidelines. You're nibbling $100 at a time. Somebody throwing you Benjamins all the time and saying, here's $100. Would you take it? And say, no, I'm going to wait for the 1,000. I'm going to wait for a stack of hundreds. This is where I talk myself. You'll see me do this many times, talk myself out of a trade. But if I can argue both sides, then Michael's rule is you shouldn't be in it. I'm wearing a real big premium, so I'm paying premium price for this. So I'm looking at this. There's a logical level for this to break down. This is a logical level for it to go up. I'm inside that range. I just took a premium out, so I'll wait. I will wait. We're going into crazy Ivan territory now. Yep, you set a time over everything as a rule for myself. What goes up must come down. I would like to share that while I'm learning ICT concepts for the future. I'm also successfully applying them in stocks. Good for you, Victor. Good for you. You see, I got out. You can argue both sides, and I just would have had my butt handed to me right there if that's where my stop loss was. So I have $100 in my pocket, and I'm happy I took out. Excuse me. So I'm happy I took out of there because you can argue both sides. Line in the sand. We're right on the line in the sand. Your stop loss is here. Big drop down. So this is potentially the reversal in the opposite direction. So we're losing strength in here. See how the body's now closed below this? So that discount array now has been taken with a downside candle. So that would definitely be an out for me. And now we're going to trade back up into breaker, senior candle, swing below, last up close candle. That becomes a senior candle now. So now that provides more support to go lower. And the candle, we turn sideways. Forget this line. That is not, if you marry that line, you're about to get a wicked divorce and she's going to take your money. If this continues down, this could be just another price leg that comes down into a time which we're expecting it to retrace into because we're into 11:30 now. This retracement back into 50 to 62% of this range that was created since 10:30, and then run higher. But again, I've now got confirmation that we're going shorter, not longer. We've got to close here. So until that, and if this consolidates and I change my mind in the next handle, I reserve the right to change my mind. But right now, I'm sideline, neutral, more downside than upside. Sorry, let me have a good cough here. I've got my throat. That should be better. No, it didn't work. Took the lows. See how, and we saw that the moment it traded below that. So if you're going long and you want to wait, this is the importance of the Derrick theory, right? Of taking the discount. Here's your range right there. Premium and discount. Remember I was talking about premium and discounts? Let's say you went here and you want to say, I'm going to wait for a discount and I want to get for the very latest discount right here. And I want to go long right there. It comes down and it trips you in and you go, great, now I'm going to go long and I want to go either back to the premium rate, get my little piece and get out, or I go, I'm going to go long, and all of a sudden it turns and comes back on you and closes below you right here. And it closes below that inversion. You go, uh-oh, it's running for this low for sure. The moment it trades back into me, so it closed here, did not take your stop loss, opened, and then traded back into you, you get out right there. You see, now I'm out. I'm broke even now. I sit on the sidelines and I wait for the next entry. It does take out the low. You go, great. Did it hit a logical level? Remember that one we were talking about, that imbalance? Reprice, rebalance. It came back in there, swept that. Now we're back up above here. So now you can reset, get ready to go either long or short again. Unless your stop loss is way down here, you won't care about this. I just want to show you precision and why that low was taken right there. It tipped its hat and said, I'm taking this low. For me, that's what I see. It's taking the low, give you an opportunity, one little opportunity to get off and wait. Takes the low, good. Now we have a new fair value gap forming. The low has been taken. We want to trade above this with a body, which we did. We trade in there, and now you can go long on there. Inside that, stop loss goes down here. If we lose this one again, same kind of rule. It's going to hit for here. So now I want to go long because that's the rule. We've just taken a low. We've got a fair value gap. We traded above it. This is Lori's entry that we gave you yesterday. I like to see a bigger body than that, but it's a body. So we're going to go with the idea, and we're right close to this. So if it fails and we come back through, we want to see it come back and we can get neutralized and short and get out, provided it doesn't come and rip through and take our stop loss. We want to see this stay open. This is the Crazy Ivan, or this would be the Crazy Ivan when it was going up. The Crazy Ivan look back. Now we want to see it go higher. Provided that rule set up there works. Now I want to be long. Hopefully you see that. SMT downside. Nope. Take my $20 and sit down somewhere. What we did with the concepts. We do not need indicators at all. Right? We don't need any indicators. Michael once talked about a moving average, an 8, or 9 and 18. Remember when he was talking about that during his core content? If any of you guys have done core content, look for his moving averages, talking about moving averages in that program I gave you yesterday. Look in there, and he'll talk about 9 and 18 moving averages. And he gave us, I remember back in the day, he gave us that setup for 9 and 18. Do you rely on ES during your analysis of NQ at any point? Chris, I don't. I'm not good at that. I'll be honest with you. There's guys out there that can read SMT divergences, and they know which market. I still, to be honest with you, still couldn't tell you which one of those markets affects the other one. Which one? If ES moves, then Nasdaq's going to go to the SMT. I somehow never really grasped the context of SMT. Like, which one do you take when one's going higher than the other? which one supports to the other. Does that mean all the others are coming up, or does that mean it's taking the high and going back down? I never spent a lot of time on that. I'm more into this playing with the minute by minute candles, really. I'm finishing up today. Thanks for the broadcast. Goodbye. Richelieu, all the best to you, man. All the best. Take care. Have a good day or night, wherever you're at in Russia. I would imagine it's quite dark there now. It also respects the 50-minute fair value gap. Not reliable. Price action is all you need. Totally agree. Yep, I have it in his core content. Yeah. So that's the only time I've ever seen him refer to, and only time I've ever seen him refer to moving averages as some sort of level of support, and how he works them. So I try to build a bot around all that stuff. I haven't found moving averages to be successful. If you could build a bot around price action the way we're doing it right here, you know how much programming it takes for it to recognize that fair value gap once it's taken a low, and the moment we got body trades above it, you'd have to have this as a memory, and have to have this as a memory. It has to remember a previous low taken with a body, come back through it, fair value gap, reach through, come back, tag that, go long, and then again reference old highs as scale out points. I've got a bot that recognizes all these scale out points, and it's a killer bot for going managing your trade. Now attaching a bot to it, like as a bot inside a bot. If you can manage the back end or manage a decent entry, I got a killer bot that'll manage the back end of a trade. But again, it's an MT4, MT5 thing, so I don't even play in there anymore, except for this funded accounts until I can get out of them. Collect some money, move to the sidelines, and wait. See how we're inside this range here? We're off the midpoint or equilibrium of that range. Premium, discount. We're near the equilibrium. So I want to see this continue driving up and get through that mean threshold. And I want to see this level provide some support. I don't want to see it run through here, because if we start to see this level give way on a break on the downside, then I will get out and close that. And I'm right close to the edge, so that's the rule, right? If I'm wrong and a body closes below it and it just comes back with a wick, I can close out with a zero loss. So it's a way of managing this trade for a long. If I'm wrong, there's my fail point. The only way I'm going to get taken out is if that goes ram and just slams down and takes me out, which is, it can happen. But we've seen multiple times where here, for example, it failed. We're running for that low. It failed, came back in and gave you a chance to get out. The low was run. We wait for a new setup to go long. Same kind of thing set up. So you would have got out at that opportunity, break even. It didn't run through and take you out right away. So anyway, that's the idea that I'm playing with here. It's about protecting your capital. This is unfortunately the price of doing business. That's your fail-safe. If it takes out your fail-safe, then be prepared to move to the side for $200 loss. But if it starts to run for you now, ideally, I want to get a piece off right up there for a quick, how many handles is that? 25. So it's 15 handles for a quick profit. Now, I've only got one handle on there, so if I make $100, that's $1,000 if I have 10 handles. Again, how you leverage your 1% of your account is entirely up to you. But I just want to kind of show you how you can manage if this fails. The only way this is going to take me out and take this is if we get a slam down candle and it takes me out right away. Like the wicks can do the damage. Well, if they rip down there, then they got me. I'm all right with that. Move to the sidelines and get back on the horse, and be zero emotion about it. Don't be upset. That's okay. Those things happen rarely. You'll see more likely to see this. Body breaks down, comes back, gives you an opportunity to get out, run the low, good. Now wait for that setup. Now that the low has been run, we'll look for this setup. It happens. Now get in right close to this and start your whole, I'm going to lose, I've saved myself here when it broke down here. Now I'm going to save myself here if it breaks down again. Now the rule, and again, I'm not going to follow the rule in this case because these are equal highs. I want to see those highs get taken out. Good, mean threshold. That's a scale out point right there. Turn around and come all the way back down. Take these lows now. Premium array, discount. Run all the way back down into here. But I want to see that mean threshold give way, and I want to see that. I want to run for a higher array here. We've been saying around the midpoint. If this rolls over and comes back down here, you'll see why smaller ranges and consolidations can beat you up. So another thing you can do is just bring this right to here and say, I'm okay if it takes me back. I don't want that low to get taken out now. I've got these highs taken. I'm back here. I don't want that. If it comes back, I made my cost of my trade. Get support off of this. There's the rejection block up there. Oops. I've got to learn to hold on to a damn trade. There's the rejection right there. Bing. Let's give him some carrot. Let's feed that puppy. So you can move the sidelines for $300 right now. See how that's precision entry, and exit. $300. Is it worth it to you? I'm gonna take it. No, I'm gonna force myself to hold this. We'll see if this continues up higher today. Do you really rely on unfinished up to date? Yep, I have it in my core content. Do you think it's proportion block? Do I think it's a proportion block? Sorry, I don't know. I've never heard of a proportion block. Sorry, if your spelling is off, that's okay. I'm okay with that. If you mean something else, by all means, Ahmed, just let me know. But I've never heard of a proportion block. Sorry, I'm not sure. And can you break down the entry for me, please? Wazim. Yes, I can, sir. We see this. We have a swing below this low. Okay? We're anticipating. Let me just show you all the way back to where it failed. I'll repeat this again. It failed when this inversion was taken. So we came down, filled the fair value gap, went back up to a premium array, discount, premium. I was talking about this premium array here going down to a discount. It did. I got in there for a long, went to a premium array, hit it, then started reacting. I was like, I'm out because now I can argue both sides. So I got out. It came all the way back down. Now you're saying if this is lost here on a close, which it did right there, it closed it. So if you're going to go long, there's your perfect entry for a long. It fails. Here's where it's important to have a backup rule that says when my trade fails, I have to have rules for when it fails. And that's my rule. My rule. It doesn't have to be yours. My rule is if that inversion breaks with a close, I'm out. My stop loss is sitting here. And if it trades back to me, in this case right here, I'm neutral. I'll get my money out and I didn't take a loss. It didn't run down and take me out right away, but now I wait. It comes down, takes the lows. Good. Now a new low has been taken. I look for a fair value gap that occurs before the low. And when we trade up through it right here, now you go long right there off the low. And if it fails again, like we did over here, if we fail below and we come back into it, then I'm out. So I want to see a body always stay above it from this point on. Boop, 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 and away we go. Hopefully that makes sense to you, sir. And it's a simple, and we're marred down in the middle of this consolidation. But you see how the candles make sense still, even in the 1 minute precision entries you can get. Let me move my caret here. Precision entries you can get for some beautiful clarity once you understand and you have a trade plan that is executed and a backup plan for when it fails. Where does it fail? You can't just throw, well, I can't say you can do whatever you like, but to me it doesn't make sense to say, oh, it looks close enough, I'm going to slam something in there, and believe me, I've done that thousands of times. You throw it in and then you go, and you have no plan for when it fails. And if you don't have a plan to look for success, and you don't have a backup plan for when it fails, you're at the mercy of the market. Literally at the mercy of the market. So hopefully that made sense to you. This piece down here, be careful. I don't want to see this breaker now lose price. So I now take this over here. Now you're looking for padding. I look for padding. Now that I'm in my trade, I want to pad it up. I want to find some love here. I want to find some support. Take a girl out to the movie here. Come on. Take me out to the movies, my friends. Find me some support. Give me some love here. Break above, come back, find support at the breaker, push through. Logical. The candles are bouncing off of exactly logical levels, you guys. And Michael's taught this to us. Where does it fail for you? Where does it fail for you now? You got to have your failure point. And I don't have a stop loss that I can get a hold of in here. There it is. So now you ask yourself, how many of you would like to be in a zero stress trade? Even if it comes back, you take your $100, take your wife out for dinner and say, look, I made $100 today. Sorry, it's demo money, but you'll have to pay, because all I can bring is my little Monopoly money, because I demo balled the snot out of this. Right? You take her out for dinner with your Monopoly money, and she looks at you sideways going, that's demo money, that's not going to work. Say, well, yeah, but look how loaded I am. And she'll go, great, I'll buy you a demo dinner. Does that make sense, Wazim? Did I make that clear enough for you, sir? Propulsion. Okay, yeah. The propulsion candle. Yeah, usually when you get a propulsion candle is when you get a breakout. So we have like a propulsion candle would be something that breaking about an old high here. This would be a propulsion type candle, and you want to see that continue running on the upside. Or you'd see a propulsion candle in here if there's one. So now you see there's no inversion, and we have a premium and discount, big premium and discount, and we have a discount array way down here. You don't want to see it come through a lot of stuff to take you out there. But if it comes all the way through my breaker is a senior array. And that's just a term I just started today, but it's a senior array. It is the boss. It's the one that provides the maximum strength, along with inversion fair value gaps, I might add. So breakers are awesome for that. Old highs are good. Rejection blocks are good. Mitigation blocks are not. They're the weakest one out of the bunch, along with just regular order blocks. Propulsion candles are good. But look for your senior arrays. For me, there's two major senior arrays, and that's your breakers and your inversions. And there's no inversion in here. I'm sure there might be something. If we take this down to a 5-second chart, let's go to 5 seconds and have a look. This same shit happens on the 5-second chart, my friends. Happens on the 5-second chart. Oops. I should have locked that sucker in there. Sorry, let me go back to 1 minute for a second. Let me get my breaker back here. Lock that in place. I'm going to show you how this stuff happens on a 5-second chart as well. Consolidation. See this consolidation? Very clean. We break above it. Model 1. There's your CAM Model 1. Poof, off you go. Your Model 1's already off and running. Here's your fair value gap. Come back inside, find support, little tiny piece you left open, breakaway. Run above, come back inside, all the way back to the order block. Mean threshold. Hello, right there on the 5-second chart. Mean threshold. And we leave. Break above an old high, fair value gap. Come back to a discount array. Look at that. Wee, mean threshold. Off we go. Run back up. Premium, discount. Premium's up here, discount's here. Wait for the premium. Fill right there. Oh, come back to a discount. Discount there. Premium, discount. Now it goes. Now it says, oh, look, I'm going to discount, premium. I go back up to the premium. I come back to the discount right here. See how we're getting smaller and smaller? Oh, my God. Boof. And it has to expand out. On a 5-second chart, you're seeing that, folks. This is a daily setup. No different. No different. The algorithm is beautiful. It's a sexy beast, let me tell you. Goes all the way back up, cleans. So that's, you see how it's just going on, running out of arrays here, down at the 5-second level. On the 1-second chart, you'd see that running out of arrays in there. Then it says, I have to reach for higher PD arrays to extend my range because I've run out of them to bounce around off inside here. The algorithm has to reset for higher arrays. At least that's how I look at it. Okay? Anyway, let's get back into the delicious and nutritious stuff. Discount array right here. Range, pull your fib tool from a swing point low. You can go from here or here. 62% retracement. Pop off of there. Is it a time and price candle? Damn right it is. It's a 58. Hello. Time and price. We're expecting a swing here. 5800. 5800. Write it down. Write it down. 5800. Yeah, it does. Thank you. Okay. Market going for Biden take profit. Ghost in the machine. Ghost in the machine. I like your moniker, Ghost in the Machine. Hans Pedersen, you have a lot of patience and are really good at explaining. Well, thank you very much, Hans. I appreciate it, my friend. I do appreciate it. Ghost in the Machine. Demo Diner. XD, yes. Okay, yeah, and I'll pay my Demo Express by Demo Express card, yeah. It's 11:38. It's a propulsion candle. Oh, it's 11:38 a propulsion candle. Okay, it took me out. I'm all right. Inside the breaker. Now we got this. We want to see, does this close? And did I pull my stop loss too tight? That's all right. Double zero. 58 00. 58 00. So we want to see this snap back. I closed below. Dun, dun, dun. So it's a good thing we had our break. See how the reason that you have to have your fail safe? There's my fail safe. Otherwise I'd be getting back here going, oh, my ass had it. I've lost all my profits. Well, I made $100. If you had a bunch, you would have scaled off a portion right there. If you had more than one handle on that, you would have scaled out a portion there. That's the fail right there. And if your stop loss is here, you'll go, holy crap, I'm wrong now. I want to get out right there. Came back to tap you, get you out. Now, if it runs through and goes back up again, I'm okay with that. That's my rule, to get out. Now, if you got out, if you do get out there, let's see if this works now. It traded below, came back in, gave you an opportunity to go neutral. Now, you're on the sidelines. Carrot is sitting on the sidelines here. Mr. Carrot is going, I'm moving on the sidelines. I'm inside the breaker. I've actually closed below the breaker's low. So if this continues down now, because we've got to close below here, you're going to say, hot diggity damn, it worked again. Maybe you won't say hot diggity damn. In whatever language you have your hot diggity dams. Premium discount. If it, again, I don't care. If it runs off, it runs off. That's my rule to get out. I'm happy with that. It came back, would have closed me out, and I would have been quite content with whatever profits I made there. I didn't give it an opportunity to go down there. I just had that as my fail-safe. Because to me, that breaker should hold price, right? We have a little inversion all cut through all these candles here, that inversion. You want to see that hold price, but if that one's starting to let go already, and this little tiny imbalances, we run that high. Ooh, do you see that? I'm just seeing it now. Can you guys see this? We ran a high. So the same kind of principle we've been running down here. That's what happens when you, if your mental focus is off and you're starting to get tired and you're missing out on things. This is where you're going to miss it. We ran the high. You came back below the little tiny piece right here. You ran a body below it. You came back up inside it. Hello, you get short. I didn't see that. But the logic is it right here. It's like, okay, why did it turn on us all of a sudden? Now we're getting below. Now you're happy that rule's working, right? Because now you're trading lower. You had your opportunity to get out. Now you're seeing why you should have taken the rule to get out. You don't go, oh look, no, he's wrong. It's going back up. It works. That's my rule. Whatever. Welcome to it. Try it out. If it works for you, great. I just want to reinstill inside your minds, people. I love you guys, and I want you all to be super successful. Have a backup fail rule that says, when my rule is broken, I'm out. And be happy. Move to the sideline. High five yourself. Do the cha-cha. Dance around the house. Shake it off. Go get a glass of water. Clear your mind. Tell yourself you love you. You're an awesome person. Fill your mind with positive stuff. Don't beat yourself up on a trade like that and say, I missed all this. No, that's greed. That's greed talking. My trade worked out. Look at that. It worked perfectly. It came back, and my save line, I walked out with $100. I'm going to kick ass in Monopoly tonight. I'm going to take my little Monopoly money, and I'm going to go buy up some houses. It failed. It worked. The failure worked. The rule worked. I hope I'm driving that home and not belaboring it and annoying you guys. I hope that helps you. Anyway, I think I missed my point. I was on a point there. My little ADHD mind's just now racing off to something different. So now, it shook us off. Oh yeah, we're back. We're over here. So it traded to that. That is the reversal right there. It doesn't have to be those big monster fair value gaps. It could be a subtle little pumpkin like that right there. Come back, tag you, go short. I didn't see it. Sorry, apologize. But that would have been the entry right there for short. That would have been one of those. It closed below the inversion right there. It comes back up inside it. Good. Get yourself out. Get yourself short now. If you're really, really on the ball, you would have caught it. Out. Get yourself neutral. Get yourself back in on the right side, because right there, it switched it up on you. You ain't going to see that on a 1 hour chart. That is literally, take your trade. You're in the wrong side. Get out the wrong side. Get in the right side. All within no losses, or maybe just the cost of your trade. And you're running for the nearest low. That's your first liquidity run. You're sniping here, folks. You're not expecting these big jammers coming all the way back here. If you want that to come back there, then have your support, have your backup, have your fail rule for your trade when it fails. All over again. And you got to be quick. When you got to be honest, you got to be super nimble to see this, catch it, and develop a fail plan. So you put your stop loss up there, and when it starts to trade, you'll see I'm taking out my trade there. I've now hauled out with precision 40 down to that low there, 25. There's another 15 handles. Are you slowly catching up to all those people that went super long? You're nibbling. You're banking some cash. Now you've run a low. You look for that fair value gap on the other side. Look at this inversion right here. Right there. Watch it. Tap away. See that? You see that? Now go to a premium array. I want to see that kind of stay open. I don't want to see it come back in there. Oh, okay. It comes back in there. So your stop loss would be down here. Body's above it already. Inversion. It goes through 3 of them and closes. Your ass is next. Ooh, right on it. Yeah, I wouldn't trust it now. We'll see though. Does it still hold or not? This could be one of those really deep ones and come all the way back up. Get yourself out right there. If your stop loss is here, wait for it to come back up, get you out, go neutral, or it just runs down and takes out your stop loss. Again, it happens. There you go. It happens. We have, sorry. The other rule is, I should explain this. We have to get a big body, get below these lows. We want a body break the high, not a wick. And these are all wicks breaking this high, so that's not a reliable trade now that I think about it. Hopefully no one took it. Again, don't take everything that I say. I reserve the right to change my mind. I want to see a big body get below these before that happens. So this is just a trade back to mean threshold, go lower. Back to order block. Remember that one we were talking about? We didn't want to see it come all the way back to? There it is, right there. We're inside it right now. Order block, mean threshold, roll over, come back, finish. Order block down here. It's the parent breaker, parent lowest candle on the run above these old highs here, even though there's a swing point here. It's the parent one that runs up here. It's the parent one of that entire leg that takes out that thing there. So you see how that has supported your idea for get out, move to the sidelines and wait for a better setup. So now you just wait for a better setup. We're in this big messy consolidation, and we're in near a discount array inside a larger range here. See how we've come back inside this from here, and I'm going to end it sometime shortly for the rest of the day. There's 62%. The body's respecting that. We're back into the wick. So I prefer to see a 70% optimum trade entry for a long. So now you've got it's definitely a 62% retracement inside that range. We've come back to a discount array. Now, is there a premium array that supports the same kind of thing? Nope, 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 nope. So we're looking for that order block up here, that breaker, that large up close candle, which is inside this breaker, right to the top of it again, and then come back into another new range for, are we compressing, getting smaller and smaller, and then finally breaking out. So you can almost anticipate what's going to happen inside this range if that candle holds, and then we come back into the new downside candle. So premium, discount, whatever forms in here, premium, discount, boom, or boom. And we're starting to we're in lunch hour now, so we're expecting this consolidation to occur. So if we're expecting a consolidation, can you trade during lunch hour? We say, no, you can't, you shouldn't. But if you were to say how I like consolidations, and I'm expecting a nice little consolidation range, then you literally go from premium to discount, back and forth, sniping the snot out of this thing. You're building an array in here in the discount range. See that? There's a little imbalance right there. Order blocks right here. That's a breaker. Ran that old high. So senior candle to senior candle. So you top it right there, senior candle, react off of it, come back into a discount array. Body, if you lose the mean threshold, look for further upside prices. Look for rejection block and higher. There's your mean threshold. Now do we close on that? Or do we just react off that? Oh, come on now. Beautiful. Right through all three of them. Right into rejection block. Look at that. Tap the rejection. Snap off of it. See where it closes. Right on the mean threshold. See that? Wicks do the damage. Right into rejection. Oh, there's a little tiny gap up. Ran it out into rejection again. We've created a new range. What time is it? That's a 12. This is the squabblers. We've got the squabbling sisters. Oh, that was back here. The squabblers. So, silver bullet entry back here. Discount array for a run back up. So, if you're in a consolidation, never buy a consolidation high to go long. Wait. And in lunch hour, say, look, I want this right there. I'm not going to settle. It's going to come to me, or I'm not going to take the trade. I don't care. My stop losses there, super tight. Keep your leverage low, because you don't want it just to run out the highs and lows. But that's a premium array, discount array. Wicking, body still closing on it. Watch how that bodies are respected by that mean threshold. Oh, now we're off to the races. See, broke above, breaker, came back into it, and off. So when I wanted to get long here, my stop loss was short, but again, that little one that we wanted to go long on there, stop loss, it just came down and took out the stop loss here, and then eventually we got leverage off, or footing off of that to go higher. So that was the swing. Again, you want to see a body break below the lows. No, I'm not gonna try and form fit it, but I can see the logic behind very tightly why it made. You could find support on that. Stop loss would have to go below this inversion now that I think about it. Instead of it sitting here when you've got a discount array that it could be reaching for, you should really have your stop loss sitting below the discount array and not sitting inside the range here. So that would have been a more logical place for me to put my stop loss now that I think about it. So, lesson learned. Look in the range that I'm in, set my stop loss a little lower. I don't want to lose that one there. That's going to be my line in the sand for higher prices. Okay. See, even I missed some. I put my stop losses in the wrong spots. Senior array, love it, D. Gotta love 62% when applied right. Lunch retracement. I'd like to see the TGIF Friday set up for lunch. Ah, yes. Okay, I would like to see a TGIF Friday set up too. But we may not get that. Maybe we may just get that continuation on the upside, because usually the TGIF Friday comes back from a Thursday high or something, right? Or the afternoon creates the high of the day, and we pull back in. So yeah, I see where you're looking for a TGIF. I hope you get it, man. I won't be here. I'm gonna bail out. I've got my friends coming over. I'm not gonna spend another 6 hours in my pajamas today. Lunchtime, like you. Nice. Okay. Greetings from Singapore, Vittorio. How you doing, my friend? How's Singapore? How's things out there? Bustling metropolis that Singapore is. Never been there. Love to go there one day. I heard it's just beautiful there. Kitty, account is safe and green for the week. Thanks for all the teachings. See you guys on Monday. Kitty, have an awesome, safe weekend, my dear. All the best to you. Vittorio, interesting to me that you don't seem to need to look for SMT. You just read the tape. Yep, that's all I do. If you can stay on the horse, it doesn't matter what direction you go. You'll find support in that direction on the 1 minute candles. That's how I look at it anyway. As you can see, you can get thrown off back and forth, back and forth, back and forth. But if you know how to stay on the horse, you can catch it back on within a few minutes. You can get back on what everybody else has been saying. Yeah, it's going bullish. No, it's not. Oh, yeah, you're right. It's going bullish. And you keep collecting little pieces in and sniping this. Overall, you add up all your snipes. Again, it takes a lot of work to do this. Some of you may just go, hell no, Darren. I just want to get off that damn candle right there. I'm in. I'm going to come back in 3 or 4 hours while you're burning your mind over each candle and sweating over each damn candle. Have a nice day. I'm out at the golf course having a grand old time because I got in at my objective right here. I want to be able to do my one trade for the day and I go away. My stop loss is up here. If I come back in an hour and I see that I'm up here, I move my stop loss to break even and I go back to the playing golf. Easy schmeezy. I don't know why you're burning your brain out trying to run after every damn candle. What I'm trying to show you folks is just if you can read the 1 minute chart like this, this becomes magic if that's your style. This is practicing tape reading at its hardest on the one, well, not the hardest, almost the hardest. 1 second chart is hard. I did this on a 5 second chart a few sessions ago and it was fun, but man, it's stressful because your mind has really got to race through these things super fast. 1 minute's nice, kind of gives you a whole minute to set up your idea, get your trading plan. So I've kind of settled in on the 1 minute chart. So no, I guess I don't need SMT, but that's only because I'm trying to stay on the bull a little longer, that's all. Or maybe you just see it in the higher time frame to figure out potential turning points. Vittorio, thank you. Waiting for TGIF. Is that Greek? Are you Greek there, my friend? Is that a Greek language I see? No, I thought that was Greek. I was going to say Yasu tikani, skalakalaya, see. That's because I have a Greek friend. And I learn all the swear words, so I know if you're swearing at me. Busy, busy, busy. Thank you. Have a wonderful weekend. Sammy J. Have a great weekend, my friend. Yeah, if you like it, give it a little thumbs up. Oh, Russia. That's Russian. I love that. It looks really cool. Welcome from Russia. We had our friend in earlier today, Richelieu. He's another Russian fella. Welcome all our Russian friends. Welcome, welcome. So if you were buying your discount array, your bank in cash, you're banking your demo dollars again, my friends. You're banking demo dollars on a Friday afternoon. We love everybody here in Canada. We're friendly people. Consolidation. Break up above. Come back to CAM Model 1. CAM Model 1. Look at consolidation. CAM Model 2 is way back in here again. So if we do get a big retracement, CAM Model 2, keep it nice and tight. If you lose the inversion, come back in, get neutral, get out, and wait for the next little break in structure. But CAM Model 1 is already off and running. If you're not familiar with the CAM models, which is Consolidation Attack Model 1, no, it's not a ICT thing, but it is an ICT thing. I had to give it a name because ICT hasn't given it a name, so I just called it a CAM Model 1, Model 2. But it's fashioned after Michael's material, not mine. I just gave it a name affectionately called the Consolidation Attack Model. And you'll see that in the educational section in the feed here on the channel. You just go into the ones that says 3 attack consolidation model. Look at that and you'll understand. I kind of explain over half an hour, real quick and easy, how to use those models. And again, everything that I'm showing you in here in terms of build, if that's your attack model as a CAM Model 1, then have your backup fail-safe protocol. You must develop a backup fail-safe protocol. Otherwise, you are gambling on your trade and hoping that your trade gets there. If it comes back and takes you out at the fail point, you're right. You're right, because now it's probably going to change in market structure. And the more you come in here and study this with me live every day, you'll start to see how these models, or how the candles are acting and working. You'll get more and more confident and more happy with your same thing. You'll get more confident with your entries, and you'll develop plans for when it fails, and you'll be confident with it. You'll feel like you finally have a trade that is robust enough to survive any sudden whipsaw back against me, for a sudden slam to take me out, a subtle change to take me out. I will see, because I watch every candle form. If you practice it on a 1 minute, these things become gold. Like that entry right there this morning, 2.5 hours ago, was gold. If you're on a 1 hour chart, and that's, you're like a day trader and you like to trade on a 1 hour chart, right there, gold. That's your entry. For us 1 minuters, if we see that, grab it, you go, so you see it right there. So let's have a look at that on the 1 minute chart. Wow, 18,120. 18,120. Did we have something on the 18,120 that supported that price? Did we even see that one coming? Hell yeah, we did. We have a swing, a low, taken with a body, create a fair value gap. We body closed above it, so as soon as we trade back to it, we're going long. Bing. We caught the same thing right there with precision, and now we find a way to support that model on the way to the upside. And right now in the morning, you 1 minute people would have found it just as good as the hourly guy did. But he's off playing golf, and you're here sweating out every single inversion that comes your way. Not that you want to live in the 1 minute charts, people, but the more you practice price action, is what Michael teaches. You gotta get in the charts. You gotta watch how price action works. And when you see how it works, and you look for entries and exits and build your backup plan for your exits, this all starts to unfold. All this becomes super clear to you, and then the money days, the salad days, become huge. They literally say, I'm putting my stop loss, I'm doing this, that's my entry on the hourly, I'm aiming for that old high right there, At 120 to 165, that's 40 handles, 45 handles. If that's your out, you're out. Move to break even. Let the rest, take half out. Let the rest ride. Do the 80-20 rule. Michael talks about multiple different ways to manage the back end of your trade. This, you could just use it if you're bored and you say, oh, can't go to golf today because it's raining. I'm going to manage the back end of my trade. Every hour I'm going to come back in and I'm going to remanage the back end. So when 11 o'clock forms, you'll come over here and say, where should my trade be? Well, my fail point will be here. Come back in, drop your fail point in, go back out, enjoy your next hour, come back in an hour or so. You've made it to here. You say, okay, great. Where's my next fail point? Well, I look for you get online with it and say, okay, well, if it fails here, it's going to run below. I'm out. I'll put my stop loss here. Then bugger off for another hour or so, come back and reevaluate. So you can use these lower levels to modify how you're going to modify your stop loss in your hourly chart. But once you understand this stuff, everything comes clearer. This is all day chart. I look at this and say, this is daily candles. Look how much money you're going to kill on a daily candle if you catch that right and your setup's right. Hopefully that makes sense to you. If it does, give me a thumbs up if you like what we're doing. It always a little bit of motivation for me. It's all the motivation I need is just to see you guys hit some beautiful, beautiful trades. Sorry, I'm not looking at every candle now. I'm getting ready to bail out of here. It's 11:30, 12:30. The afternoon one could be a beautiful return into TGIF Friday. If you get a nice TGIF Friday, look for all. If you're an hourly person, look for all your discount arrays, order block. That's a big breaker right there. You run back up as soon as you break that high. Look for that breaker to come back to in the hourly. This is an area, if you come charging all the way back into it, we've got discount, premium, wherever we make that high, and you want to do your TGIF Friday, look for 50% of the run back into this hourly, this daily candle here, or the whole week, and you're 20 to 30%, which we'll probably find it will be somewhere inside this leg that we're moving to go up higher. I'd love to see it hit this sucker here today, just to kind of give us some validation on our projection. It's a bit of a reach. We still have another 100 handles to reach for. It would be so cool if we could get up there. I'd be happy with that. And if we nail that level there, you can high five yourself and imagine you're high fiving me, because I'd be all like strutting around my office going, oh yeah, we called it, we called it. Tristan Lee. I love sitting in the 5 and 15 second charts to read. A lot of learning watching fast price action. It is. Good on you, Tristan, if you can stay in there. If you're one of those high functioning ADHD guys, I'm not super high functioning, so if you love that, the noise and the speed of that, and you can hyper focus on it, like, cause my mind's all over the place most of the time, but when I hyper focus, I love it. I can really, nothing else matters to me except those candles. So I like this 1 minute, does it nicely for me, but 5 seconds, oof, that's a brain stimulator, I tell you. That's super exciting. So good for you, Tristan, if you love being in there. If you're reading price action like this over and over again, catching the high, the low, and each PD array off of every freaking candle and every range, and like array to like array, then Good on you, man. Consolidation. Model 1 right here, back into that. Look for this here. Model 1, Model 2, back into the breaker again. We have this guy right here, run down below the lows. Parent breaker of that run down in here. So take Mr. Breaker here, stick him right there. Ooh, hello. Consolidation. Break out above, come back through, tippy tappy. Away you go. Pull your fib tool. Man's got to love his fib tool. Look where 50% puts you, right inside that inversion again. Wicks do the damage, let the body close above that, then you're going back higher. Next price leg higher. And what would the next price leg higher be? Up here. 18. So big figure level 18,300. See that? Around there. If we don't even get down to 50%, it's a good positive sign for a real strong drive forward still. So we'll leave the carrot up here for our objective for the day. Can you smell what the crop is cooking? Carrot soup today. Yes, I know I ripped that off the rock. Can you smell what the rock is cooking? And we're stealing his thing and calling it, can you smell what the crop is cooking? Carrot soup. Not to trade, just to watch exactly what you're describing here on the 1 minute, especially during consolidation periods. Yeah, it's really neat to see it. And you see it works just as well on a 5-second chart, the 15-second chart, for sure. Order block, fair value gap, tap in. It ran that high, it becomes a breaker. Tap it. You want to leave from there. You don't want to see the midpoint of this go. Otherwise, that's just a run on liquidity above, and we're coming back into a discount array again. So you want to see that mean threshold hold. You don't want this inversion to close. So if you were going long there, same kind of rule we used way down here. If you're going long there, stop loss goes here. If it trades below it and closes and comes back into it, get out and wait for a next setup. If it clears that high, I move to break even. If it comes back, takes you out again, doesn't care. It's my sniping. You want to try and get a quick snipe out of that. And from there to there, I don't know how many handles that is, like 10 handles, 11 handles. You just took 11 handles out in 2 minutes. That's how snipey you can get. Snippy snipey. It's late in the day. Any point in time that can turn around and slam on you. So that's why I'm always banging it up real quick behind it. In case it turns around and decides to run all the way down into a discount area where you're in a premium. So you're paying a premium price and you want to try and get it at a higher price, get out at a higher price. So you get your 10 handles, move to the sidelines, that you quickly grab in and out, grab a couple of handles here and here and there. You got there, you're out there. That's 63 to 73. There's 10 handles right there. Or you now move into profits and wait and let it sit there. If it comes back, takes you out, pays for your trade, who cares? You just ride the rest of it up now. So I will try and make another module this weekend. I'm trying to think about what I'm gonna, got some ideas I want to make something up. It'll be in the channel. And those of you who are on Telegram, you can see the Telegram channel above you there on the bio section, right next to ThetaWaveTrader. You'll see links where we post stuff in the links, and on the weekends we have a little chat. If we decide to get together on Skype on the weekend, I will share the link on the Telegram channel so you guys can pop in if you want. I think John Doe's going to give us a rundown on one of the techniques he uses for trading ICT rules, based on some, it's kind of like an indicator, I'm not quite sure, but he's going to explain to us from an ICT perspective and how to use it. So I'll try and set that up with him, but you'll find it on the channel. Join the Telegram. I know you guys got so many different places you can join. I do appreciate you popping into ours, but the Telegram channel is where you'll find the information for that meeting on Sunday if we decide to go that route. And so you can join there and then pop into the Skype. I'll put a Skype channel opening so you can come in there, and you're more than welcome to pop in and have a chat with him. I wanted to be able to build this community so that if any of you guys have got great ways, if there's a specific ICT setup that you like, that you want to share with everybody, that, you know, maybe you've got a different slant on how you use it, I'd love to interview you. We can do a little chat. We'll pop the video on the thing, on the site, so people can see your ideas. Gives you a little bit of exposure if that's what you're in for. If you just want to share your ideas with us, that's what we're all about, is building a community where people help each other. It's not about just handing out freebies. I understand there's people in here that don't know what they're doing. They're just going to sit here and catch every trade everybody else makes. That happens. But if you really want to learn how to fish, you go and study ICT stuff. You go to his channel at ICT that goes to the machine. Don't buy it from anybody else. Just go to the horse. Go to the horse's mouth. Get the guy who codified the whole thing. Keep it germane. Use the ICT index app to stay germane with exactly the way he describes it, so you don't have other people's interpretations of stuff. Keep it as clean as you can. And come here and practice. Watch us practice it. Watch us read the tape over and over. And hopefully it brings more clarity to your trade setup and gives you a nice solid trade plan that you can trade in a more stress-free kind of way. And that's the kind of objective I like to bring, and have a community of people that just care about each other. We want to see everybody succeed here. It's not peacocking. It's not about who's the best. None of that's not flashy dollar bills, and I don't care about that stuff. I don't care about how much money you make, and I don't care how much flashy cars and vehicles and stuff you buy. What impresses me is, are you paying it forward? Are you helping other people along the way less fortunate than you? That's the stuff I'm interested in. If you make money, good for you. I'm happy for you. You're supporting your family. You're moving forward in life. Bless you. But let's all help each other out. Help each other out, and we'll all move ahead in this world. Move together as a group. You're way more powerful as a group than you are as an individual. And I hope what I'm bringing here helps to move a group, helps to move people, and replicate that. I want you guys to share this with other people. This isn't hoarding it. I don't care. Take everything I've shown you, and teach your family, teach your friends. Pretend it's yours. I don't care. If you're helping other people, then I've done my job in life. I've done my thing. So with that, I'm going to leave you guys. On a Friday, I hope your TGIF Friday works for you. And I hope you've got something from this today. And if you love it, give me the thumbs up. Invite your friends. Join the community. Help people out. Get as many people as you can to join our little spot here. And we'll help as many people along the way as we can. I'm excited to help you guys out. I'm excited to spend the rest of the year with you guys and see what we can create by the end of the year. Someone says, check the Dow. He says, check the Dow. Right there, mean threshold. That was the thing we were talking about before. Today, where this closes inside this inversion, either above it or below it will dictate, unless we launch out of here. Watch where this closes today. Are we inside this? If we close inside it, you're stuck. You're still waiting for support above or step below. And you still have a fair value gap in here. And we're still inside this bigger fair value gap. I like this inversion we're creating. If we can stay right here and close on top of that, that whole place to enter in for a long on Monday is what I'm looking for Dow. On the daily chart. 1 minute chart, not too, I don't really care much about that right now. I'm just looking at this overall perspective. What do we got here? Right back into the regular trading hours. Look at that. Beautiful. Is there anything specific you wanted me to look for on there, Lori? This, we didn't get a body break above it. We did have a wick though. There's a little tiny imbalance in there. Come back inside, stop losses here. Order block. We've swept below the lows. This is an imbalance here. Now we've got this swing here. Look for that little guy here. If we get some support on it, look for more upside. Inside this little piece right here. If we get a body close above that, and you want to get through the mean threshold, when you're this tight, it's hard because you can just turn around and come all the way back down again. You want to aim for that high, but you want this body here to break above that gap. Let me open this up a bit more so you can see it. We have this swing below the low. We've come all the way back into this discount array right here. We filled the discount array beautifully with precision. We're reacting off of it. See this here? Body gets above. If we come back into this to go long, look for profits. Again, where you scale your profits out is your business. I'm just going to tell you the potential entry is here. Equal lows, but remember they're equal lows. They're not going to leave those untouched. But if we close above that now in the minute, you trade back into it, stop loss goes here. Now you want the body to make sure it stays above that now, because if it closes below there, it's running for here. Back to the same rule of exit. Have your fail safe at that point. There, that one closed above it. That would be the entry. Now it's already running through it. Mean threshold, oops. Right there, go long, short, stop losses there. Equal lows, be scary, watch out, you can take those. Yeah, that just ran back up into order block. It's going to take these lows now. Too even. See, now that's one of those, if you did go in long there, you're about to get your stop taken, you wouldn't get an opportunity for it to trade back up to you and go, oh, I'm going to get you out. That's a straight run down to take you out. That happens. That happens. Now it could turn around and go back up, and you go, oh, you should have got lower. So again, just it's a wick below there. You want to get a big body below that and look for that same kind of fair value gap, trade above it to go higher above these old highs. If it's starting to run back, see how we've hit the mean threshold there? Now if we've decided to turn around, and that's the high, we've come back into the mean thresholds holding, candles, order blocks holding, support, one more time off the body, order block, find support off of that, continuation on the downside. You're looking to get back into that inversion again. That order block, mean thresholds holding price. So that's what you're seeing here. You're just kind of hoping that you want to stay traded above that gap down there. So you want to see all this hold. Where's the holding point? Right there. Okay, so if you start blowing below this again throughout the rest of the day, and you take these lows, then you're trading back into that inversion again. And ideally, if you want to go long, that's not the place you want to be, because now you're waiting for a decent setup, either in the midpoint or the low of that again to run higher. This is the top, the take here. Watch that area still. Run for those highs. This is the frustrating thing where you say, oh, I came back and my stop loss was here. Look at that PD array over there again. That's a repeat of the same problem I had earlier. If there's a lower PD array in here, be below it. Your stop loss would be below it. So like down here instead of right there. I just repeated the same mistake I made earlier. My brain's tired. That's what ran down, took you out. Now you're back on track to go higher. Order block, there's your padding. We're above it now. See? I made that mistake earlier. Did not put it below the array that's in the discount of the range you're in. Stop loss needs to go down here, not at the tweezers, equal lows that can be taken. They get taken. Now we're running for rejection block. Take a portion off there. Breaker. Boom. See that? Hit it. Take a piece off there. They're strong, man. You whap on them. Mean threshold or discount array. You need to grab yourself a quick couple of dozen beer there. Off of that guy. Stop loss here. So those who took that, I hope you didn't put your stop loss there. You learned the lesson I was trying. I didn't take this morning, which was down here. Equal lows. If you did, great. If you didn't, that's okay too. Again, lesson to be learned. I gotta look for those ranges. So that's a new rule I have to incorporate into my idea. So it's good. There's your equal highs. You want to see this now, blow through this, and that becomes, you really want that to close there, because then when you come back tomorrow, or sorry, Monday, you look for a run back into this to go higher, then we get excited. Because I bet your Nasdaq's running too, isn't it? Yes, it is. Looking for our objective. Now, wouldn't that be cool if we would have caught that big sucker way down here earlier this morning? Or you're super smart and you caught the Cam 1 model right off the bat right here. You would have had absolute precision on your entry. Well, a tiny bit of a drawdown. Sorry about that, Cam 1 people. and you're aiming for your objective. If you could weather all that, man, you are a steely-eyed missile man. You got your you got ICT flowing in your veins, if you caught those. Hopefully you don't change in a future. What do you mean? You hope I don't change? Like what? Like turn evil? Or turn mean? Keep me humble, you guys. Keep the message alive through your own actions, and keep me humble. I don't want to leave anyone behind. I honestly, truly believe what I believe. I'm here to help. And if you want to use it and call it your own, I really couldn't give a shit. If your ego is that important and you want to just steal Michael's stuff, or you want to steal ideas and bolster your own ego, go for it. I don't care. If it helps you, I'm happy. I just hope you're paying it forward. I hope you're helping somebody else along the way. You find your path, that it's not all about self. Right now, this entitled that it's all about me, me, me. It's a terrible, terrible way to live. We're all going around on this big blue ball, whipping through space at 100 miles per second around the sun. So we're all in it together, and we're all running to the same race ending. The ending's the same for every single one of us. So carry some people along with you. Some of those people that stumble, bring them with you. I promise you're going to feel a better sense of joy helping people than just hoarding it all to yourself. And if that's your path, that's your path. I'm not here to stop you. What do you say about ES? Okay, last 4 minutes, I'm out of here. ES, well, it's doing the same thing. It's still bullish. It's beautiful bullish. It's making new highs, so welcome to history, folks. Welcome to history. Consolidation. Return to consolidation. E1 or CAM 1 entry. CAM 2 entry is right in the midpoint inside that fair value gap, and there is no CAM 3. Just a CAM 1 and a CAM 2 on this one. And you're aiming for whatever I'm not going to tell you what to aim for. You aim for your own thing. Look at your premium and discount arrays and decide how far into the day you want to be before that suddenly goes slam against you. Have your rule. Have your backup fail plan. You must have a backup fail plan. If you don't, you're going to lose, and you're going to get frustrated, and you're either going to get better or look for a reason to blame somebody else for not following a set of rules, or making rules and following them. And I can preach that, because up until very recently, I never had rules. I just went, what the hell, throw it in there. Doesn't work that way. Got to follow rules. Your own. That's my ES thing. I didn't expect that run from below the EU also. Was hoping that it respected the breaker block, hourly breaker block. Alex, been a while, Darren. Alex, nice to see you still streaming. Sorry, Alex, I don't remember you. Where were you from? Were you like right from the beginning? Were you one of the first early people that popped in? Alex, where do I remember your name? Alex, where are you from? I caught the 1133 breaker. Stoic, the candle got eaten. Oh, the carrot got eaten, did it? Sorry, let me move the carrot for you. No, it's still up here. I'll move it over this way a little bit for you. It's always important to put it in front of the algorithm so it's got a place to sniff. It doesn't want to look backwards. It likes to look ahead. Array, premium, discount. Watch for consolidation. coming into a discount inside a consolidation CAM 1 entry. That would be a nice CAM 1 entry. Stop loss goes down here, inside your consolidation here. Well, you could put it right here. If you lose this on the downside, stop loss is here. Again, the body, the same rule for failing, the one I use anyway, would be right here. If my discount array fails and my mean threshold fails, then it's probably coming for the lows. And then this, I look for this to be support to continue down. Is this the high? You're always looking for, is this the high? You'll find confirmation eventually that the high is formed, and you'll see it. I promise you, when that thing rolls over and hammers down, whatever that fair value gap is, when it taps it, that'll be that one little subtle boop, and then it'll tear away on you. How quick are you going to watch it? And those hourly people will never see it. It'll just be a big giant wick ripping all the way down through their profits. But you guys would have seen it on a 1 minute chart. So there are benefits of being on a 1 minute versus an hourly. You catch the turn. You see when the horse spins and tries to throw you off. If you're on it, you jump off, then jump back on it again to get short. So yeah, Stoic Jack, we're up here. I love that name, Stoic Jack. Stoic Jack. Yeah, carrot's up here, my friend. We're going to keep it up there. See what we get out of it. And with that, my illustrious friends, the community of loving traders, of people who are just out to change the model of the world into a beautiful thing. If this is what it takes to get you a little bit of freedom, I hope this can provide it for you. I truly do. I hope you all have a safe and happy weekend. And I look forward to seeing you again on Monday. If I don't see you on Sunday, I will see you on Monday. And I wish you guys all the best. Take care.